Hi, hello, my dear CA intermediate students appearing for May 23 exam. So, I know that you have been waiting for this mighty 50 question and answer revision. So, first of all, you can download this PDF from the description below. So, you can just click on the description below and download this PDF. So, this mighty 50 questions contains the top 50 questions selected from different sources, and these are all not past exam questions, so not tested in exam so far, and these are the difficult questions, so like the standard questions at CA intermediate level, even beyond CA intermediate level. So if at all the paper is difficult, you can expect these kind of questions. So therefore definitely we need to prepare these questions, because definitely you would have prepared already the normal type of questions which have been tested for your past exam, etc. and all. But these 50 questions are the top 50 questions which you have to revise, covering entire portion of GST for CA intermediate. Okay, so now without wasting your time, so let's proceed to the question number 1. So you can see here question number 1. This question number 1 is related to input tax credit chapter, that to that section 17 subsection 4. 17 subsection 4 is what? So like apportionment of credit between banks, financial institutions and NBFC. So a bank, financial institution or NBFC will have partly taxable supplies and partly exempted supplies. So full credit they cannot enjoy. They have two options. Option number 1, they will take proportionate ITC. Option number 2, they will be taking ad hoc 50% ITC and remaining 50% will be lapsed. So this question is related to that. So UCO Bank has a branch in Aurangabad, engaged in supply of services by way of accepting deposits and extending loans, opted for the option to avail credit of 50% of input tax credit of the month. So they are going for which option? Second option. They are not going for the first option, proportionate ITC, but they are going for the second option, that is 50% of the ITC as per 17 subsection 4. It has a head office at Pune, and input tax credit available for the month of October 2017 is 1,20,000. So what is the total ITC? The total ITC, if you see, the total ITC is 1,20,000, and this 1,20,000 includes so the following. Now, whenever they are going for this 50% option, there is one important point that we need to remember, that with respect to inward supply from a distinct person, they can enjoy full ITC, no need to reduce 50%. So full ITC can be taken. So with respect to inward supply from a distinct person. So if you see the first point, service availed from its distinct establishment, that is from Pune. So yes, they can take full ITC, they don't have to reduce 50%, so 100% ITC is available. Whereas outdoor catering service received for its employees, usually outdoor catering service is a blocked credit. Food and beverages, outdoor catering, duty treatment, health insurance, life insurance, hiring, leasing and renting of motor vehicles is a blocked credit. And in case of outdoor catering, we have exceptions, but that exception is not applicable in this case. What is that exception? Inward supply, outward supply in the same category, not applicable. Inward supply part of the outward supply, not applicable. Statutory obligation, not applicable here. So due to that reason, it's a blocked credit. In case of blocked credit, first of all, we will not take the ITC. Forget about 50%. Then goods obsolete and the value have been written off in the books. So that is purchased goods which are used for distribution as gifts or free samples, or purchased goods are destroyed, lost, written off, etc., stolen. So in that case, so ITC is not available, because that is also a blocked credit, and ITC not available in that case. Then auditing services, we don't have any restriction. Auditing services is not in blocked credits, and it is used in the codes or furtherance of business. So definitely they can take ITC, but how much ITC they can take? Only 50% ITC they can take. Then next, goods for personal use of employees. So goods for personal use of employees, 7,500 rupees. So actually it is blocked credit, and even otherwise also, as per section 16, if inward supplies are not used in the course or furtherance of business, ITC not available. So therefore it's also again a blocked credit, or ITC not available. Now what you will do is that 27,000 plus 25,000 into 50%, 12,500. So 27,000 plus 12,500, 39,500 you will take as the answer. No, you are making a mistake. There is a big blunder that we are making. Why? Because they have given the total ITC. So total ITC 1,20,000, but they gave this information. So first reduce it and see, is there any balance? Because the sum of this is not 1,20,000. If the sum of this is 1,20,000, okay, but there is some balance, that's a hidden information here. So with respect to that balance, that is differential amount, so we will be able to take 50% of the ITC. So what is that? 1,20,000 minus 27,000 minus 32,000 minus 11,000 minus 25,000 minus 7,500. So there is a balance of 17,500. 17,500 is still there. So therefore on that 17,500 we will be able to take 50%. So now how to proceed with the answer? Simple. First 1,20,000 you have. In that 1,20,000, so you take out 27,000. Why we need to take out 27,000? Because on the 27,000 full credit is available. Just take it aside. So now what is remaining? 93,000. In this 93,000, what is a credit on which you cannot take at all? Blocked credit or ineligible credit. What is that? So 32,000. So take out minus 32,000 and 11,000 and 7,500. So what is the balance left? 42,500. In that 42,500 eligible ITC, how much will be able to take ITC? 50%. So into 50%. So 42,500 into 50%, 21,250. Hope you understood. So first 1,20,000 we are taking. From that 1,20,000 we are excluding 27,000. So we got 93,000. From that 93,000 we are taking out blocked ITC. So blocked ITC we are taking out. So remaining 42,500 we got. In this 42,500, 50% is only able to take this credit. Eligible ITC into 50%, 21,250. But the 27,000 fully we can take. So the 27,000 you add fully. So 48,250. 48,250 is the correct answer of ITC that can be taken. And what is the ITC that shall be lapsed? So here out of this 42,500, 50% you cannot take now. So that 21,250 is the ITC that shall be lapsed. So this is one very good question related to section 17 subsection 4. Then question number 2. Determine whether input tax credit will be available for the following activities as in accordance with the provisions of input tax credit chapter of CGST Act and state reasons thereof. So purely it is related to blocked credit. So first we need to check, is it covered under 17 subsection 5? If it is covered under 17 subsection 5, it's a blocked credit, ITC not available, like that we need to write. Suppose if it is not covered under 17 subsection 5, then we need to check, is it used in the course or furtherance of business? If it is used in the course or furtherance of business, then ITC is available. So therefore checklist what we need to do, first check whether it is in 17.5. If yes, then blocked credit, ITC not available. If not in 17 subsection 5, then check whether it is used in the course or furtherance of business. Yes, it is used in the course or furtherance of business, ITC available. No, it is not used in the course or furtherance of business, ITC not available. As simple as that. So first point, cement is used for construction of administration building. So we have a blocked credit. What is that? Any service received, works contract service received, or any goods purchased for construction of an immobile property is blocked credit. But we have 3 exceptions. Number 1, if the expenditure is charged to P&L, is it given that they have charged the expenditure to P&L? No. So in the absence of exception, see, remember in exam, so there will be a question, and in that question, so whether we need to take which way, because in this case if the expenditure is charged to P&L, ITC is available, like that you will take an assumption, but actually you should not take that assumption. See, any exception, if it is given in the question, then only we need to take, otherwise that exception is not satisfied. For example, if it is given in the question that expenditure is charged to P&L, it's an exception, so then only we need to take that. Otherwise, so they have not charged it to P&L, not satisfied, that exception not satisfied, which means that it's a blocked credit, ITC not available with respect to this. So cement used for construction of administration building. And what is another exception? Suppose if the expenditure is received or incurred by the supplier, that is a builder. So but no, it is not like that, nowhere it is given. And then next point is that plant and machinery. No, clearly it is given as building. So how we will take it as plant and machinery? Whereas second point, cement is used for foundation for pillars of pillars supporting a boiler. Boiler is a plant and machinery, even though it is construction related expenditure, but this is construction of immobile property, which is a plant and machinery. So ITC is available under the exceptions. Then works contract service is provided by subcontractor to a contractor. So another exception is what? Generally any service received for construction of an immobile property or works contract service received for construction of an immobile property or any goods purchased for construction of an immobile property is blocked credit. However, this restriction do not apply to supplier of service. This restriction is only applicable to the recipient of service, that is the owner of the property, not to the builder. Suppose if I am a builder and if I receive works contract service or if I receive construction service for providing construction service, definitely I can take ITC. So this point is related to that. Works contract service is provided by subcontractor to a contractor. So a contractor is receiving services from a subcontractor in relation to works contract service. Contractor is not the owner of the property. Therefore, ITC is available. It is covered under the exceptions. Then health insurance for factory workers, if it is statutorily mandated to take that insurance, generally life insurance and health insurance are blocked credits, but we have an exception. That exception is what? If that is incurred by employer to employee under a statutory obligation, then ITC is available with respect to that. So in this case, even though health insurance is a blocked credit, but it is under this statutory obligation, statutorily mandated to take such insurance. So due to that reason, ITC is available with respect to this. Then goods are used for running a guest house in a factory. So now this is actually a disputed area, because guest house means it is for personal purpose. So then how ITC will be available, like that we may get a doubt. So first, is there any blocked credit with respect to that? No, we don't have any blocked credit with respect to that. And secondly, what we need to check is that, is it used in the course or furtherance of business? So yes, guest house inside a factory is not for personal purpose. It is definitely for business purpose. So it is in the course or furtherance of business and ITC available, but there are some contrary, advanced rulings and judgments related to that, but that is not relevant for your exam purpose. For your exam purpose, what you need to understand is that ITC available or not available. ITC is available. So therefore, goods used for running a guest house inside a factory, ITC available. Then car used by a factory for personal use. So we don't have to bother about anything else. See, car, motor vehicle, capacity does not exceed 13, exceptions ITC available, but don't bother about that. Why do not bother about that? Because they use the word personal use. So even if it is eligible for ITC, the moment you are using that for personal purpose, ITC not available with respect to that. Then steel and other structural are used for setting up a telecommunication tower. See, telecommunication tower is actually, excluded from the meaning of plant and machinery. So generally, any goods purchased for construction of an immobile property is blocked credit. However, immobile property, if it is plant and machinery, ITC available. But plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate. So due to that reason, even though it like plant and machinery ITC available, but plant and machinery excludes telecommunication tower, which means that ITC not available with respect to that. So here in total, only in case of 2, 3, 4 and 5. 2, 3, 4 and 5, it is yes, ITC available. In all other cases, ITC not available. And along with the justification, you need to properly write. And many students have shared their answer sheets, and what I have observed is that the language that they are writing is so generic. So please try to use the legal language to the extent possible. So then only you can expect good marks from that. Okay. So give the references, section references, and write the explanation properly, and that too, try to use the legal language to the extent possible. So definitely you can score good marks. Then question number 3, the following are the details of purchases, sales, etc. affected by Messrs. Asha and Company, a registered manufacturer under CGST Act 2017. Purchased raw material A from local dealer 86,100 inclusive of GST 5%. Okay. Raw material B also they purchased from a local dealer. Capital goods they purchased. Other direct and indirect expenses earned 10% profit margin on cost. During the month of October, only 70% of the production is sold within the state and applicable GST rate being 12%. Calculate the amount of CGST, SGST payable after utilizing the input tax credit. So this is a very, very interesting question. So in this question, what has happened is that, so they have not given the sales data. So first you need to arrive at the sales data, and thereafter you need to compute the gross GST liability, and from the purchase data you need to know what is the ITC. Now here interestingly, so to arrive at the sales, what you need to do is that we need to go for cost plus pricing, because if you see they have given the cost data and the pricing is how profit margin on cost. So therefore On the cost we need to add the profit margin and we will get the sales. But when you take the cost, if ITC is available, whether you need to add it to the cost, no, you should not add it to the cost. For example, you are purchasing for 86,100 inclusive of GST 5%. So what is the GST? 86,100 into 5 divided by 105, that is 4,100. So which means how much will be added as cost? So only 82,000 should be taken into the cost. Why only 82,000 should be taken into the cost? 86,100 so is what you are paying, but out of that 4,100 is eligible for ITC. So which means the cost is literally 82,000 rupees only. So that 82,000 rupees will be taken as a cost. So therefore, so in this case 4,100 is available as ITC and 82,000 will be taken into the cost. So what you need to do is that clearly we need to arrive at the sale price. So first working note will be like computation of sale price and thereafter only gross GST payable. So in that parallelly we need to know what is the ITC also. So therefore if you see towards the cost, so here how much should be taken towards the cost? 82,000 should be taken towards the cost and 4,100 will be taken towards ITC. The next one, purchase raw material B from local dealer 1,12,000 inclusive of GST at 12%. So now in this case again, so ITC is available, na? Raw material A and raw material B. Generally raw material is not in the blocked credit and it is used in the course or furtherance of business. So definitely ITC is available in this case. So therefore 1,12,000 into, so 12 divided by 112, that is 12,000 rupees will be the ITC. So the remaining will be 1 lakh. Then number 3, purchased capital goods from within the state to be used in manufacture of taxable goods 1,96,000 inclusive of GST at 12%, depreciation at 15% to be charged. So now in this case 1,96,000 GST 12%. So 1,96,000 into 12 divided by 112. So ITC is how much? 21,000. So 21,000 is ITC. But remember, entire cost of capital goods, we will not take it into the cost of production. We will take only the amortization. So how much they are giving? 15%. So means related to this production, out of the total cost, 15% is only related to this production. So what is the cost? 1,96,000. From 1,96,000, ITC is 21,000. So what is the remaining portion is 1,75,000. In that 1,75,000, how much should be taken into cost? Only 15%. So 26,250 should be taken into cost. Okay. Hope you understood how we got. So 1,96,000 into 12 divided by 112 is the ITC component. That ITC can be taken fully. And capital goods, we can take ITC fully in the month of purchase itself, no issue. Whereas the remaining part is cost. Cost fully should not be added to the cost of production because only depreciation should be taken. How much is the depreciation? 15%. So due to that reason, the cost into 15% is taken into the cost of production. That is depreciation 26,250. Other direct and indirect expenses, we don't have any GST information, which means that there is no ITC with respect to that, and entire 55,460 will be taken to the cost. And now you got the cost of production. So what is the cost of production? So 82,000 plus 1 lakh plus 26,250 plus 55,460. So that will be 2,63,710. 2,63,710 is for what? Total. But how much is only sold now? 70%. See, because you are determining the sales, means first from cost of production, you need to take the cost of sales. So what is the cost of sales? So 2,63,710, or in other words, cost of goods sold. So into 70%. So what is that 70%? 1,84,597. For this 1,84,597, you add 10% because it is given 10% profit margin on cost. So add 10%. So that will be what? 2,03,056. So 0.7. So 2,03,057 rounded off. So this will be taken as the sale value. So hope you understood how we got. So what we are doing? First we are taking the cost of production. For that cost of production, we are multiplying 70% because that is only cost of sales. For that we are adding 10%, so which is profit margin. So then we got the sale value. On that sale value, we need to pay GST. So what is the rate of GST here? So they have not given any rate, or they gave compute the amount of CGST, SGST payable after utilizing the input tax credit and the GST rate on outward supply being 12%. So CGST, SGST. So if you see here, Output tax liability CGST SGST 2,03,057. 2,03,057 into, so 6%, that is 12,183. So 12,183 CGST and 12,183 SGST. So now this is gross liability minus input tax credit. If you see input tax credit here, already we computed the input tax credit 4,100, 12,000 and 21,000. So if you see here, total ITC 4,100 plus 12,000 plus 21,000, so that is 37,100. 37,100 divided by 2. So equally we will use. So divided by 2, that is 18,550. 18,550 minus 12,000. So 1 second. Raw material A, raw material B and capital goods. So 4,100, 2,050, 2,050 and 6,000, 6,000 and 10,500, 10,500. So equally distributed 18,550. But the liability is what? 12,183. So which means 6,347 excess credit we have. 6,347 is the excess credit to be carried forward. Which means what is the liability? Liability is 0. Net liability is 0. We have excess credit carried forward, that is 6,347, like 367. And ITC CGST, because everything is intrastate only. So due to that reason, all these cases we are taking it as intrastate supply. So that's why CGST SGST paid. So that CGST SGST paid is taken as credit and adjusted against the liability. Then question number 4. Question number 4, Messrs ABC and Company, a chartered accountancy firm, has its office in Bengaluru and is registered under GST in the state of Karnataka. It submitted the following information for the month of April. Statutory audit services provided. So this is statutory audit service provided. This is not their inward supply. This is their outward supply, a CA firm. So intrastate supply, so it is chargeable to GST, CGST, SGST. ITR filing services provided within Karnataka, again CGST, SGST. Internal audit service provided to Mumbai client 1,80,000. So that is IGST liability. So therefore from this we get the liability. Now ABC and Company has also incurred the following expenses, which means these are all the inward supplies. So in the month of April, for the purpose of providing the taxable services, car purchased by the firm for use of senior partner of the firm for official use. So first car is motor vehicle and used for transportation of persons and capacity does not exceed 13. And we have 3 exceptions. Is it used for further supply? No. Is it used in the business of transportation of passengers? No. Is it used for imparting driving skills? No. Even though it is business expenditure, but ITC not available with respect to this. Then office rent paid to landlord who is registered in the state of Karnataka. So now in this case, so we don't have any blocked credit with respect to the office rent and CGST, SGST paid. So definitely we can take ITC with respect to that and it is used in the course of furtherance of business. Then professional fee paid to Mr. Rajesh, a practicing chartered accountant, for professional services availed. TDS of 20,000 is deducted under section 194J of Income Tax Act 1961. So professional fee paid to Rajesh, a practicing chartered accountant. So now in this case definitely it will be covered under like GST whatever. So see here, first of all ABC and Company is a chartered accountancy firm. So they paid the professional fee. So to one person, Mr. Rajesh, a chartered accountant. So yes, definitely we can take ITC with respect to that. We don't have any blocked credit with respect to that. And it is used in the course or furtherance of business and we can take ITC. Then computer purchase for office purpose again. So it is not blocked credit and used in the course or furtherance of business. So ITC available. Out of the above 4 suppliers or service providers, landlord of office to whom rent was paid did not upload his GSTR1 within the specified time allowed under GST, resulting in GST amount not reflected in 2B of ABC and Company. So which means, so this 450 ITC not available, even though it is not blocked credit, even though it is used in the course or furtherance of business, but so we have to take only the matched ITC as per revised section 41. So availment of ITC, only the matched ITC can be taken. So what is a matched ITC? That ITC which is reflected in GSTR 2B of the recipient. So when it will be reflected if the supplier has filed GSTR 1 on time. So in this case GSTR 1 is not filed on time. Due to that reason recipient cannot avail ITC, even though there is no other restriction, but here because of the matching there is an issue. Compute the net GST payable. So by ABC for the month of April, so we have CGST as just liability only. CGST is just IGST liability. Credit is only 18,000, 18,000, 3,000 and 3,000. So first we will see what is the liability. Liability wise, if you see 1,20,000 and the rate of GST is 9% and 9%. So 1,20,000 into 9%, 10,800 and 10,800 CGST as GST. So then next that ITR services. So 1,60,000, 1,60,000 into, so 9%, 9%, 14,400, 14,400. Then internal audit services, 1,80,000. So 1,80,000 into IGST, 18%, 32,400. So we have got the total liability 25,200, 25,200 and 32,400 minus ITC. So what is the ITC? So only 21,000. Why 21,000? 18,000 plus 18,000 plus 3,000. 18,000 plus 3,000, 18,000 plus 3,000, so that will be 21,000. So 21,000 is reduced. So we got net GST payable 4,200 CGST, 4,200 SGST and 32,400 and ITC here. So only 21,000 and 21,000 is available. So this is like one 8 marks question. So generally the first question for your exam in the part division B descriptive is a question like computation of net GST payable. So like this an 8 marks question could be asked. Then question number 5. Miss P, a registered supplier of Rajasthan, has received the following amounts in respect of the activities undertaken by her during the month of April. Amount received for warehousing of sugarcane. There are many students who ask me this doubt, that is, sir, whether storage and warehousing of sugarcane, fruits and vegetables, etc. is exempted, because right now storage and warehousing of cereals and pulses is only exempted. So then in that case other goods are omitted. So is it now taxable or exempted? So please try to understand that anyhow we have first exemption which says that any service in relation to agriculture or agricultural produce is exempted. So now storage and warehousing of agricultural produce is exempted. Under that point, any service in relation to agriculture or agricultural produce is exempted. So storage and warehousing of agricultural produce is exempted. So whatever is agricultural produce, its warehousing is always exempted. If it is not agricultural produce, only two will be exempted, that is, cereals and pulses and minor forest produce. This minor forest produce and cereals and pulses are not agricultural produce. So but these two only separately given as exemption. But if it is an agricultural produce, anyhow it is exempted. Is sugarcane an agricultural produce? Yes. What is an agricultural produce? The primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which does not alter its essential characteristics. So therefore sugarcane is an agricultural produce and storage and warehousing of sugarcane is exempted. Okay, so this is exempted only. Then next one, commission received as business facilitator for the services provided to urban branch of a nationalized bank with respect to savings bank account. Urban branch. So business facilitator to urban branch is taxable. So only to rural branch will be exempted, to urban branch will be taxable. Okay, but who will pay GST in this case? GST is not payable by Miss P, but GST is payable by the bank. So therefore it will be taxable and it will come under RCM in the hands of bank. So business facilitator service to bank or financial institution. So liability to pay GST is on the banking company. Then amount received for services provided by way of labor contracts for repairing a single residential unit otherwise than as a part of residential complex. Actually, construction of a single residential unit is only exempted, but repairs in relation to single residential unit is taxable. So actually in case of construction we have two exemptions. So the first exemption is, so construction of a single residential unit otherwise than as a part of complex. So whereas another exemption is construction or repairs of housing for all mission or urban Awas Yojana projects. Okay, so but for single residential unit only construction expenditure is exempted, but here it is repair services. So repairing a single residential unit will be taxable and liability to pay GST is on Miss P. So it is taxable under FCM. So if you see here, first case nil, second case also nil, because it will be taxable in the hands of the bank. So then third one only, 10,000 into rate of GST 18%, so 1,800, that will be taken as the liability. Okay, and here in this case, all transactions above are interstate transactions. So that's the reason why we are taking it as IGST payable. Then question number 6, a garment factory receives a government order for making uniforms for a commando unit. The supply is exempt from tax under a special notification. So sale of uniforms to commando unit is exempted. The fabric is separately procured for supply. So we purchased some fabric for using in this. So anyhow on that ITC we will not have taken, but thread and lining material for the collars are the ones which are used for other taxable products of the factory also. So we have some common raw material which is used partly for taxable supply and partly for exempted supply. The turnover of other products of the factory and exempted uniform is 4 crore and 1 crore. So exempted is 1 crore, taxable is 4 crore, so total is 5 crores. Now the ITC on thread and lining material procured in July is 5,000 and 15,000 respectively. Calculate the eligible ITC. Now we have one 17 subsection 2 which says that if inward supplies are partly used for taxable and partly used for exempted, proportionate ITC available with respect to taxable. So how to compute the proportionate ITC? Total ITC into taxable turnover divided by total turnover. What is the total ITC? 5,000 plus 15,000. So 5,000 plus 15,000 is 20,000. So 20,000 into taxable divided by total. What is the taxable turnover? 4 crores divided by total 5 crores. So that is with respect to the ITC that is available. So we will take 20,000 into 4 by 5 is the ITC available. So 20,000 into 4 by 5, so that is 16,000. And what is the ITC that is not available? 1 by 5. So 1 by 5 is what? 4,000. So 4,000 is ineligible ITC and 16,000 will be eligible ITC. Then question number 7, on 25th August, Messrs. Agarwal and Agarwal, a registered supplier of taxable goods located in Bengaluru, Karnataka, purchased one machine for 12,39,000 including GST. Okay, from one supplier of Maharashtra who issued invoice on the same date. So 12,39,000 inclusive of GST, and Agarwal put the machinery to use the same day and availed the ITC. Super, they availed the ITC. Now what happened is that Messrs. Agarwal and Agarwal used the machine in the process of manufacture of taxable goods. However, they sold the machine to Mr. Suresh Kumar of Andhra Pradesh on 20th August of next year for 7,50,000 excluding GST. With reference to section 18 subsection 6. What does 18 subsection 6? If you purchase some capital goods and on that capital goods if the GST paid has been availed as ITC, you purchase some capital goods, on that capital goods you paid some GST and that GST has been availed as ITC. So now when you dispose of those capital goods, then the GST payable will be A, that is ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of disposal. So ITC availed minus 5% for every quarter or part thereof. So here if you see when they are purchasing in the month of August. So August, 25th August. So August means that comes in which quarter? July, August, September, October, November, December. Again next year, Jan, Feb, March, April, May, June. Then July, August, September, because August only they are selling. So part thereof. So for every quarter or part thereof. So total 5 quarters. So 5 into 5. So that is 25%, or B, GST on sale value. If you take A, ITC availed 12,39,000 into, what is the rate of GST here? The applicable rate of GST is 18%. So into 18 divided by 118. So that is 1,89,000 here. So 1,89,000 minus 5% for every quarter or part there. So 25% we need to reduce. So 3 plus 2, 5 quarters. So 1,89,000 minus 25%, 1,41,750. This is A, or B, GST on sale value. What is the sale value here? The sale value of this capital goods is 7,50,000 excluding GST 18%. So 7,50,000 into 18%, that will be 1,35,000. So whichever is higher, which is higher, 1,41,750 will be taken as the higher, and that will be the GST payable in terms of 18 subsection 6. Then next one, Question number 8. Asha traders dealing in supply of garments received the following subsidies. Value of taxable supply of garments is 45,000. Subsidy directly linked to the supply and received from a trust engaged in promotion of the garment is 12,000. Subsidy from central government for promoting such units is 9,000. Determine the transaction value as per section 15. So, subsidies as per section 15 subsection 2 clause E, subsidies are divided into two. That is, directly linked to price, not directly linked to the price. If it is not directly linked to the price, ignore that subsidy for the purpose of valuation, and that subsidy will be separately treated as donation. Whereas if the subsidy is directly linked to the price, so then that subsidy directly linked to the price is again divided into two. Is it received from central government or state government or others? If it is from central government or state government, then it is to be included in the value. Okay, if it is from central government or state government, it is to be excluded from the value. Whereas if it is from other than central government or state government, others, then it is to be included in the value. Okay, so first you need to check, is it directly linked to the price or not? Yes, it is directly linked to the price. And in the absence of information, we will take it as directly linked to the price only. So only when it is given that not directly linked to the price, we will take it as not directly linked to the price. Otherwise, we will take it as directly linked to the price. Okay, directly linked to the price. Is it from central government, state government? No, it is from a trust. So this 12,000 rupees is to be included or to be excluded? It is to be included. It is to be included. It is to be included. Then subsidy from central government for promoting such units 9,000. So they have not given directly into the price, but generally we will take it as directly into the price, but it is from central government. So this 9,000 rupees is to be excluded, but this is as per provision. But we don't know in the given price 45,000 whether it is already included or excluded. So then what we need to do? So there are two views. View number one, the given 45,000 is assumed to be after considering the subsidy, which means that while arriving at this 45,000, so there is some amount. From that amount, we reduce 12,000 and 9,000. There is some amount. From that amount, we reduce 12,000 and 9,000. We arrive at the balance. On that balance, so that is 45,000. Okay, that is view 1. View 2 is, while arriving at 45,000, we have not reduced 12,000 and 9,000. But in the absence of information in the question, so for CA exam, always we need to take first assumption. What is that? View 1 means this 45,000 is after considering subsidy, which means there is some price X. From the X you reduced already 12,000 and 9,000, and the remaining amount is 45,000. So you take 45,000. 45,000 is the transaction value, and 12,000 is to be included. But while arriving at 45,000, we reduce the 12,000. So we need to add. An amount is to be included. In the given price, it is excluded. So we need to add. Then 9,000 rupees. 9,000 rupees is to be excluded or included. It is to be excluded. And while arriving at this 45,000, it is already excluded. So therefore, you need to ignore. So therefore, if you see what will be taken as the transaction value, the transaction value is 57,000. Then question number 9. So in this question number 9, so related to valuation, from the following information, determine the value of taxable supply as per the provisions of section 15 of CGST Act. Value of machine is 15 lakhs including GST at 12%. So whenever you see in the question the information as inclusive of GST, so whenever the information is given as inclusive of GST, all the expenses given in the question are also inclusive of GST. So what we need to do, we need to make the adjustments. So take 15 lakhs, and to this 15 lakhs, you need to make the adjustments. To this 15 lakhs, you need to make the adjustments, and you will arrive at one value. So that value will be inclusive of GST, and accordingly GST will be computed on inclusive basis. So see here. So we will take 15 lakhs as the value first, and then the invoice includes the following. So taxes charged separately by the supplier 15,000 rupees. So taxes charged by the supplier 15,000 rupees other than CGST, SGST. So as per 15 subsection 2 clause A, any taxes, duties and cess by whatever name called other than GST should be included in the value. And in the given price, So it is already included, okay. The invoice value includes the following, that is given, includes the following. So taxes, duties and cess by whatever name called, it is to be included in the value, and in the given price it is already included. So therefore ignore, don't consider this. Weightment and loading charges, weightment and loading charges again as per 15(2)(c). So any expenditure incurred by the supplier and charged to the recipient before delivery of goods or before supply of service, it is to be included in the value, and in the given price it is already included. So therefore ignore it. So for the purpose of valuation, then consultancy charges in relation to pre-installation planning. So this is again manufacturing cost. So before delivery of goods. So as per 15(2)(c), it is to be included. So the first one is 15(2)(a). The first one is 15(2)(a), and this one is 15(2)(c), and even third one is also 15(2)(c). It is to be included in the given value. It is already included because this is the invoice value includes the following. So no need to add it again. Then testing charges and inspection charges. So all these testing charges and inspection charges also the same as per 15(2)(c). So these are the expenses incurred, because see, testing and inspection will be done definitely before delivery of the goods. All these expenses are incurred by the supplier and charged to the recipient before delivery of the goods, and the given value it is already included. So therefore further inclusion shall not arise. Other information, subsidy received from central government for setting up a factory in the backward region. Subsidy received from third party for timely supply of machine to the recipient. They have not given whether it is directly linked to the price or not directly linked to the price. So I told you, whenever the question is silent, we need to take the subsidy as directly linked to the price. And first subsidy, if you see, that subsidy is from central government. So subsidy directly linked to the price from CGRSG is to be excluded as per 15(2)(e). As per 15(2)(e), it is to be excluded. And whether the given price is before considering subsidy or after considering subsidy, we don't have, and give reasons with suitable assumptions wherever required. So therefore, what is the assumption that we are taking here? The given price is after considering subsidy. Means while arriving at 15 lakhs, already 51,000 is excluded, and as per provision it is to be excluded. In the given price it is already excluded. So therefore again ignore for the purpose of valuation. Subsidy received from a third party. So as per 15(2)(e), directly linked to the price from a third person is to be included while arriving at 15 lakhs. So as we took the assumption that the 15 lakhs is after considering subsidy, means while arriving at 15 lakhs the subsidy has been reduced, so 50,000, but as per provision it is to be included. In the given price it is excluded. So therefore we need to add this 50,000. Then trade discount actually allowed, shown separately where necessary. So trade discount. So trade discount is pre-supply discount, not a post-supply discount. Pre-supply discount allowed as a reduction, and the value of the machine is given as, without considering this discount, because this discount is separate. So therefore we need to reduce this discount. So what will be taken as the value? 15 lakhs plus 50,000 minus 24,000. So that will be 15,26,000 will be taken. 15,26,000 will be taken as the value, and that value also considered as cum duty. So that is inclusive of GST, correct? This is considered as inclusive of GST. So why? Because I told you, whenever the given price is inclusive of GST, all the adjustments that we do is also inclusive of GST. Finally, we arrive at one number, that is 15,26,000, that is inclusive of GST, and GST rate calculated at 12%. So 15,26,000 into 12 divided by 112. So that will be 1,63,500. Once you reduce this 1,63,500 from 15,26,000, so 13,62,500 will be taken as the value of taxable supply. So this is how we need to arrive at the answer. So usually every attempt they are giving one question on valuation compulsorily. Okay. So therefore this type of question you may get. So that is usually it will be exclusive of tax. I selected this question because so whenever it is given as inclusive of tax, how we need to do the treatment for that purpose. And in the absence of information in the question, So we need to take the price as after considering subsidy. After considering subsidy means what? As subsidy is an income, that's why it has a special point. So subsidy is reduced to arrive at the given price. That's how we need to understand. Then next question, question number 10. This is little difficult question related to value of supply. Again, Lakshmi Limited of Bhopal, Madhya Pradesh is a supplier of machinery. Lakshmi Limited has supplied machinery to PQR Enterprises in Indore, Madhya Pradesh on 1st October 2017. The invoice for supply has been issued on 1st October 2017. Thus, the time of supply of the machinery is 1st October 2017. So, 1st October 2017 is the time of supply, which means October month they need to pay GST with respect to that. Lakshmi Limited and PQR Enterprises are not related. Following information is provided. Why this information is there that they are not related? Because if they are related, transaction value will not be taken. We need to determine the value as per rules. Suppose if they are not related, we will take transaction value. Okay. So this point has been tested in the previous attempt, that is November 22 exam. The first question in the descriptive question clearly they gave. So value as determined as per rules and transaction value. So many students took transaction value because that's a related party transaction. We need to take the value as per rules. So that value as per rules. So how to determine that we don't have in syllabus, but that information will be given in the question itself as to what is the value as per rules that should be taken then. But here we will take transaction value only. Basic price of the machinery excluding all taxes, but including design and engineering charges 10,000 and loading charges 20,000 is 20 lakhs. So we will take 20 lakhs as the transaction value. Price of the machinery, transaction value. This 20 lakhs will be taken as transaction value. And this design and engineering charges and loading charges, these are incidental or ancillary charges. So are charged before delivery of the goods. So as per 15(2)(c), it is to be included. Which one? This engineering charges and loading charges is to be included. And in the given price it is already included. So therefore further inclusion shall not arise. Okay. So 15(2)(c) it is to be included. In the given price of 20 lakhs it is already included. So no need to add it again. So take 20 lakhs. Then Lakshmi Limited provides 2-year free warranty for the machinery. And Lakshmi Limited also provides an extended 1-year warranty on payment of additional charges of 1 lakh, and PQR Enterprises opted for the additional warranty. So at the time of purchase itself, we need to pay an extra amount to get an extended warranty. If we pay that extra amount to get the extended warranty, so that much amount is before delivery of the goods. Again, as per 15(2)(c), it is to be included in the value, and in the given price it is not included because these are additional information. So we need to add. So we need to add this 1 lakh. So 1 lakh we need to add. Then Lakshmi Limited has collected consultancy charges in relation to pre-installation planning of 10,000 and freight and insurance charges from place of removal to buyer's premises 20,000. So pre-installation planning, definitely this pre-installation planning of 10,000 is before delivery. Then freight and insurance from place of removal to buyer's premises, because they have to deliver the goods at the recipient's location. So this freight and insurance, again it will become before delivery. So pre-delivery expenses. So therefore as per 15(2)(c) it is to be included, and this 10,000 and this 20,000 we need to add. In the given price it is not included, so we need to add that 10,000 and 20,000. Then Lakshmi Limited received subsidy of 50,000 from central government for supplying the machinery to backward region, since receiver was located in a backward region. Lakshmi Limited also received 50,000 from a joint venture partner of PQR Enterprises for making timely supply of machinery to the recipient. So there are 2 subsidies, and we don't know whether the given price is after considering subsidy or not. So we need to take the assumption that the given price is after considering the subsidy, which means while arriving at this 20 lakhs, we would have reduced this to 50,000 rupees. So therefore first 50,000 rupees, if you see, it is to be included or to be excluded? It is to be excluded. Why it is to be excluded? Because it is from whom? It is from central government. So directly into the price. And again another assumption is that In the absence of information, we need to take the subsidy as directly linked to the price. So therefore, so subsidy directly linked to the price from central government, it is to be excluded, and while arriving at the 20 lakhs, it is already excluded. So therefore, ignore this 50,000 rupees. Whereas next 50,000 rupees, it is to be included in the value. So in the given price, it is excluded because this is from other than CG or SG na. So therefore, this 50,000 is to be included in the value. In the given price, it is not included. So therefore, we need to add. Then a cash discount of 1% of the basic price of the machinery is offered at the time of supply. So at the time of supply itself, they are giving the discount. So as per 15 subsection 3, it is a pre-supply discount. Pre-supply discount is allowed as a deduction. So this 1% of the basic price of the machinery is allowed as a reduction. So we need to reduce that, and provided that the payment is made by the recipient within 30 days from the receipt of machinery at his premises. Discount at 1% was given to Peaker Enterprises as it agreed to make payment within 30 days. So the discount is to be excluded. Now, what is the basic price of the machinery? 20 lakhs. So therefore, how much will be taken as the discount? So 20 lakhs into 1%. So that is what? 20,000 will be taken as the discount. So that should be reduced. So now, if you see the value, first we will take 20 lakhs. And from the 20 lakhs, we will add 1 lakh. Okay, then we will add 10,000 and 20,000. And then that 50,000 rupees subsidy also we will be adding. Then minus 20,000. So therefore, we get 21 lakh 60,000. 21 lakh 60,000 will be taken as the value of supply. On that, the rate of GST. So it is given that, so the machine attracts CGST, SGST 9%, 9%. And where is the supplier located? Supplier is located in Madhya Pradesh, and place where they are delivering is also Madhya Pradesh. Therefore, it is an intra-state supply chargeable to CGST, SGST. So accordingly, 9%, 9% CGST, SGST will be taken. So that's how we need to arrive at the answer. Now there is a alternative answer that is possible. That is, here, why should we take 20 lakhs as the price? Because this 20 lakhs is inclusive of the 10,000 and 20,000. So why should we take 20 lakhs as the price? Because this 20 lakhs is inclusive of this 10,000 and 20,000, which means 19 lakh 70,000 only will be taken as the price. Because 20 lakhs minus 30,000, so 19 lakh 70,000 is the price, and on that 1% should be computed. So 19,700 should be taken as the discount is another alternative answer. But that answer is also correct. So that is given here. So it is also possible to take a view that basic price of the machinery is 19 lakh 70,000. Accordingly, the discount will be 19,700 and the value of supply will be 21 lakh 60,300. How? So 19,700 we need to reduce instead of 20,000. So 21 lakh 60,000 plus 20,000 minus 19,700. So will be 21 lakh 60,300, and on that CGST, SGST will be computed. But both the answers are correct answers only. Okay. Anyway, because usually CA Institute will give alternative answers also in the suggested, and because of which we will be getting the marks. So don't worry about that. But in exam, so which one we need to follow? Both we can follow, but you can follow whatever is the price that is given itself as the basic price, that is 20 lakhs itself can be taken as the basic price. Then next question number 11, Mrs. Kajal, a registered supplier of Jaipur, Rajasthan, has made the following supplies in the month of January. Supply of laptop bag along with laptop to a customer of Mumbai for 55,000 exclusive of GST. So here, laptop and laptop bag are supplied. Now, what is the question about? So they have given the GST rates, etc. From the above information, compute the GST liability, so of Mrs. Kajal for the month of January. So first we will see laptop and laptop bag. Laptop is taxable, laptop bag also taxable. So we need to apply the concept of composite supply and mixed supply. First, we need to check is it composite supply or not. For the three conditions are there. So first condition is that all the given supply should be taxable. Number two, naturally bundled in the ordinary course of business, and one of which is a principal supply. If these three conditions are satisfied, it will come under composite supply. If you see laptop and laptop bag, all are taxable. Naturally bundled in the ordinary course of business. Yes, there are exceptions, but in the ordinary course of business, laptop and laptop bag are naturally bundled. And the principal supply here is laptop. So therefore, what is the principal supply rate? Laptop rate is what? 18%. So that will be taken and applied it on the entire value. So therefore, 18% will be taken and applied on entire value. What is the value? 55,000. So 55,000 into 18%. 55,000 into 18% is 9,900. So 9,900 will be taken. And why it is IGST liability? Because so Kajal is located in Rajasthan, whereas they are making delivery of the laptop to Mumbai, Maharashtra. So that's why it will be an IGST liability. Then second one, supply of 10,000 kits at 50 rupees each, amounting to 5 lakhs exclusive of GST to Ram Fancy Store in Kota, Rajasthan. So within the state, intra-state, each kit consists of 1 hair oil, 1 beauty soap and 1 hair comb. So beauty soap, hair oil and hair comb are not naturally bundled in the ordinary course of business. That's why it is not a composite supply. Even though hair oil, beauty soap and hair comb all are taxable, but these are not naturally bundled in the ordinary course of business. So that's the reason why it is not a composite supply. When it is not a composite supply, we need to check, is it mixed supply? For mixed supply, only one condition, that is it should not be a composite supply and there should be a single price. Is there a single price? Yes. So there is a single price of 5 lakh rupees. So due to that reason, that is 50 rupees each. So therefore it will become mixed supply. In case of mixed supply, we need to take the highest rate. So between hair oil, beauty soap and hair comb, so what is the highest rate? 28% is the highest rate. So therefore 28% means 14%, 14%. So 5 lakhs into 14% and 5 lakhs into 14%, CGST and SGST liability will be taken. Okay. Then next one. So here the rate of IGST at, so what is the rate of GST? Laptop 18%. Okay. Then here CGST and SGST at 14% each. Okay. Then number 3, 100 kits are given as free gift to Jaipur customers on the occasion of Mrs. Kajal's birthday. Each kit consists of 1 hair oil and 1 beauty soap. Cost of each kit is rupees 35, but the open market value of such kit of goods and the goods of like kind and quality is not available. Input tax credit has not been taken on the goods contained in the kit. Okay. So then what will be taken as the, so again it will become composite supply or mixed supply, but before that we need to check, is it supply or not. So they are giving it as free gift to Jaipur customers. And ITC not availed, ITC not availed. So first of all 71A will not come. So supply under 71A, because there is no consideration. So 71C will be applicable or not. For that we have 4 points. D for disposal of business asset on which ITC is availed. So that is not applicable because ITC is not availed. Even though it is business asset, but ITC is not availed. Related party transactions, no, because customers cannot be treated as related party transactions or distinct persons. Then import of service from a related person also no, and principal agent transaction also no. So none of these points will be applicable. So consequently, this third one is not a supply. So the activity is not a supply. When the activity is not a supply, so then why we need to classify it as composite supply or mixed supply. Then fourth one, event management services provided free of cost to her brother for his son's marriage function in Indore, Madhya Pradesh. So to her brother. So brother, and so whenever service is provided to a brother, we don't know whether brother is dependent or not dependent. Okay. So cost of providing such service is rupees 80,000, but the open market value of such service and the service of like kind and quality is not available. Okay. So again here it is not a supply because we don't have the information whether that brother is dependent or not dependent. So that's the reason why we will treat it as not a supply, because brother means, see, only when the brother is dependent they will be treated as related. So that's an exception. Generally brother is not related, dependent brother will be related. Is it given in the question that they are dependent? No. So which means they are not dependent. So consequently again, so 71A will not come, 71C related party transaction also will not come. So therefore it is not a supply. 1400 chairs and 100 coolers hired out to Function Garden, Ajmer, Rajasthan for rupees 3,30,000 exclusive of GST, including cost of transporting the chairs and coolers from Mrs. Kajal's godown at Jaipur to the Function Garden, Ajmer. So now what will be taken as the supplies here? So two supplies are there, hiring of chairs and coolers, and second supply is transportation. So both are taxable. If you see, hiring, renting of chairs and coolers 12% and transportation 5%. So both are taxable. Both are taxable and naturally bundled in the ordinary course of business, yes. Usually, so whenever the function and all is happening, so when we take the chairs etc. on rent, so they will only do the transportation, and after the function gets over, they will only pack and take it back. So therefore, it will be coming under naturally bundled in the ordinary course of business, and the principal supply here is renting of chairs and coolers. So therefore, it is a composite supply, and we will take the rate renting of chairs and coolers 12% as the rate here. And where are they located? Rajasthan, and they are also making supply to Rajasthan. So therefore, CGST and SGST, CGST and SGST at what is the rate? 12% means 6% each. Okay, 6% each will be taken. Now, Mrs. Kajal has paid the cost of transportation of chairs and coolers to unregistered GTA located in the state of Rajasthan at 20 rupees for each chair and each cooler, and in turn has charged 20 only for each chair and cooler and from the function garden for transportation of the same. Fine. So that is, they are paying something and the same amount they are collecting here is what they are telling. So generally GTA service it may be exempted, but when they incurred that expenditure and recovered it from the recipient, so that is not exempted, because so this Kajal is not into the business of GTA, so she is providing transportation services. So along with renting, so this will be part of renting of the chairs and coolers. Then next one, interest of 6,400 inclusive of GST. As per 15 subsection 2 clause D, interest, late fee or penalty for delay in receipt of consideration should be included in the value. Okay, so the 6,400 should be included in the value as the payment is not made within 30 days. So then, but don't include 6,400, take out the GST component. So this is for what? Ram Fancy. Ram Fancy store means which transaction? Second transaction. For second transaction, what is the rate of GST? 28%, 14 plus 14. So which means 6,400 into 28 by 128. So that will be 1,400. So then 5,000 rupees will be towards value and GST will be 1,400. So then the 1,400 we need to take 700 and 700. So that's the reason why in case of second transaction, we did not just take 5 lakhs, 5 lakh plus 5,000. Why 5,000? Because that interest component is there, na? That is also added on that 70,700, 70,700, first case 9,900, and third and fourth transaction nil, not a supply. And then chairs and coolers 3,30,000 into 6%, 19,800, 19,800. So chairs and coolers, and thereafter transportation of chairs and coolers by GTA. So as the supplier is unregistered, they need to pay GST under RCM na. So whenever GTA service either it will be FCM or RCM. If the supplier is unregistered, so definitely GST is payable under RCM. So therefore 1,500 chairs and coolers into 20. So on that 2.5%. In case of RCM, the rate is 5%. 2.5% CGST, 2.5% SGST. So the sixth point is what generally we miss in the exam. Be careful with respect to that. So the total GST liability will be 91,250, 91,250 and 9,900. Then next one, here we will see question number 12. From the following information, determine the person liable to pay GST. Both supplier and recipient are located in India. Mr. Atul is a agent of life insurance company. So in that Sir CG got salads. So there are some list of activities which are covered under RCM where liability to pay GST is on the recipient, correct? So what are those list of activities? Sir CG got salads. In that agents, so we have total 5 agents who are covered under RCM. So in that insurance agent to insurance company. So therefore, Atul is a agent of insurance company. So who will pay GST in this case? So insurance company is liable to pay GST in this case. So first one, liability is under RCM. So insurance company is liable to pay GST under RCM, life insurance company. And then number 2, XYZ Limited availed service of Vimal GTA for transportation of goods by road from factory located in New Delhi to its Jaipur depot and paid freight of 1 lakh. So there are two options. If GTA opts to pay tax, then GTA will pay GST under FCM. Otherwise, if GTA opts not to pay tax, so like that we need to bifurcate and write if GTA opts to pay tax, if GTA opts not to pay tax. So if GTA is opting not to pay tax, then RCM will be applicable with respect to that. Then third, Ranka Jewelers Limited paid 50 lakhs for sponsorship of Miss India beauty pageant for sponsorship services. So in case of sponsorship services, what will be taken? So is there any RCM? Yes, RCM is applicable if the recipient is body corporate or firm. So here who is the recipient? Ranka Jewelers Limited is the recipient, so which is a body corporate. So that's why it will come under RCM. Sponsorship service is covered under RCM if the recipient, that is the one who pay the sponsorship money, is body corporate or firm. So Ranka Jewelers Limited is required to pay GST under RCM. Ranka Jewelers Limited being a body corporate, it will be liable to pay GST under RCM. Then legal services provided by VHB and Company, a partnership firm of New Delhi, to Tata Motors Limited, Mumbai. So generally advocate services provided to a business entity is covered under RCM, where liability to pay GST is on the business entity, that is Tata Motors Limited, Mumbai. So Tata Motors Limited, Mumbai is liable to pay GST under RCM. Then number 5, service provided by director of a company not in the capacity as an employee. What if the director is working as an employee? Then it is not a supply, excluded from supply. So not in the capacity as an employee, so to the company. So again, director services to company or body corporate is covered under RCM. So the 5th one, so it is covered under RCM, where the company body corporate is required to pay GST. Infrastructural support service provided by government to business entity. So therefore we don't have any exemption with respect to that. Any service provided by government to business entity other than renting of immovable property to unregistered person, so will come under RCM. So where liability to pay GST is on the business entity only. So then renting of immovable property service provided by government to business entity. Now this is where, so if the business entity is registered, so then they will pay GST under RCM. If the business entity is unregistered, so then RCM will not be applicable, FCM will be applicable. So but renting of immovable property to unregistered person is exempted now, that is generally. But in case of business entity, so here unregistered is business entity only, so that is not covered. So government providing services, renting of immovable property to business entity will be taxable. If the business entity is registered, it will come under RCM. If the business entity is not registered, otherwise RCM is not applicable, where government is required to pay GST under FCM and charge it to that business entity. Then question number 13, Pioneer Academy is providing private coaching for IAS and is registered under GST. During November 2017, it organizes a seminar on demonetization, impact on Indian economy in its campus in Delhi. So discuss the taxability of the following receipts in the hands of Pioneer Academy. Sponsorship charges of 20 lakhs from Mr. A sole proprietor of a business for grant of sponsorship rights of program. So sponsorship charges 20 lakhs received from Mr. A sole proprietor. So this will not be covered under RCM, because the one who pay the sponsorship money is the recipient. So who is the recipient here? Mr. A, other than body corporate or firm. So it will be coming under FCM. So therefore who will pay GST? The Pioneer Academy. Pioneer Academy is required to pay GST under FCM. Advertisement charges of 30,000 rupees from B Limited, small advertisement banner outside the hall. So now in this case what will be taken? As the recipient is advertisement charges. So advertisement charges is not sponsorship service. See, sponsorship is different from advertisement services. So the first one is sponsorship, but the second one is advertisement charges. This is not sponsorship. So that's why again it will be taxable under FCM. So donations of 50,000 from Mr. C, a salaried employee. He does not want his name to appear anywhere in the seminar. So means what kind of donation? Unconditional donation. Unconditional donation means, so no consideration. So not treated as consideration, not consideration. Unconditional donations, not treated as consideration. So when it is not treated as consideration, so then it is not a supply, correct? So it is not a supply, and therefore first case 3,60,000 because 20 lakhs into the rate of GST 18%, and second case 30,000 into 18% 5,400. Third case there is no liability. Then question number 14. Pehalal has obtained registration in the current financial year in Uttar Pradesh. His turnover in the preceding financial year was 19,90,000. He has received the following amounts in respect of the activities undertaken by him in the month of September. So particulars: funeral service 8,80,000. So funeral service, so we have exclusion from supply spelled slow. In the D is death related activities. So death related activities is what? Funeral, burial, crematorium, mortuary, including transportation of the deceased. That is not a supply. So therefore this 8,80,000 is not a supply. This 8,80,000 is not a supply. Then service of warehousing of fruits and vegetables. So fruits and vegetables, if you see, is agricultural produce. So any service in relation to agriculture or agricultural produce is exempted, correct? So storage and warehousing of fruits and vegetables is exempted. So first one 8,80,000 is not a supply. That is not a supply. Okay. And the next one is exempted. Exempted. And then electrically operated bus given on hire to a municipal corporation. So electric vehicle that can carry more than 12 passengers given on hire to a local authority. Again, we have exemption with respect to renting of motor vehicles. So therefore that is exempted. Then next, service provided to recognized sports body as a commentator. So only 5 people providing service to recognized sports body is exempted. What are they? So player, referee, umpire, coach, team manager. But commentator is not in the list. So therefore this 2 lakhs will be taxable. This 2 lakhs will be taxable. Then commission received as an insurance agent from an insurance company. So this is taxable and it will come under FCM, correct? Which one? Previous one. But the second one is taxable, but it will come under RCM, means it will be taxable in whose hands? In the hands of the insurance company. So we should not include it in the tax liability of Pehalal. So it should be included in the tax liability of the recipient, that is insurance company. Commission received as a business facilitator for service provided to urban branch of a nationalized bank with respect to savings bank account. So again it will be taxable and it will come under RCM, because business facilitator to banking company is covered under RCM, where liability to pay GST is on banking company, so it will not be included in the tax liability of that Pehalal. Then security services provided to Damodar Engineering College. So security and housekeeping service provided to category 1 educational institution is only covered under, exemption. But here it is not exempted, it will be taxable. But whether security agency service will come under RCM? Yes, if the supplier is other than body corporate. Yes, supplier is other than body corporate and recipient is registered person. So therefore it will be taxable under RCM in the hands of the Damodar Engineering College. So again it will not be included in the tax liability of Pehalal. But we need to write the note related to this. Further, he has received the following services in the month of September. So far 7 points, if you see, only one will be taxable in their hands, that is 2 lakhs. Only one will be taxable in their hands, that is 2 lakhs. Remaining and all will not be taxable in their hands. Either it is exempted or it is not a supply or it is covered under RCM, taxable in some other person's hands. Only the 2 lakhs, so 2 lakhs into 9% and 9%. Next. Further, he has received the following services in the month of September. These are inward supply. Freight paid to unregistered GTA for his business activities related to serial number 1 above. First, GTA services. GTA services, supplier is unregistered. So which means the recipient has to pay GST under RCM. So on this 8,80,000, pay halal is required to pay GST under RCM 5% and 5%. Can they take ITC with respect to that? No. Why they cannot take ITC with respect to that? Because they are using this GTA service for providing outward supply, which is funeral service, which is not a supply. So there is no liability. So due to that reason, they cannot take ITC with respect to the inward supply. So 8,80,000, first they need to pay GST. So 1 second, 1 lakh. Actually, it is not 8,80,000. It is 1 lakh. So on that 1 lakh, CGST, SGST will be 2.5%, 2.5%. So 2,500, 2,500, and they cannot take ITC with respect to this. Then legal advice received from Messrs. Qanun Associates, a partnership firm seeking advice in relation to tax dispute. So services provided by individual advocate or firm of advocate to a business entity. So here is pay halal a business entity? Yes. Whose turnover during the previous year does not exceed threshold limit for registration, because see the first paragraph, their turnover during the previous year was 19,90,000, does not exceed the threshold limit for registration. Due to that reason, the service provided by individual advocate or firm of advocate to a business entity is exempted. So this particular 50,000 is exempted. So there is no GST with respect to that. So they have a RCM liability 2,500 and 2,500 FCM liability 18,000, 18,000. So therefore 20,500 ITC is not available to them. So 20,500 and 20,500 will be taken as the total GST payable, and we need to write the notes properly. So please go through the notes. So you read one so that you will know how the notes to be written in the exam. So again, this is qualifying for a 8 marks question. If at all they give a question like this, for 8 marks they can ask. Then question number 15, ZN Company is a firm of advocates. Partners are X and Y, having equal profit sharing ratio. Find out the GST liability. Legal professional service provided to Mr. A, an advocate of Bombay High Court. So now here what they are asking is that, so supplier, above figures are exclusive of GST. So see the below information, last paragraph. Above figures are exclusive of GST. If any GST is there, it will be paid separately. XN Company, that is ZN Company, is not a small service provider. Find out GST payable by the supplier of service, that is ZN Company, and GST payable by the recipient of service. Okay. So first, advocate services will be either exempted or covered under RCM. So it will not be covered under FCM. Correct. So first point, if you see, Mr. A, an advocate of Bombay High Court, generally services provided by firm of advocate to another individual advocate or firm of advocate is exempted. So the service itself is exempted. So first point is exempted. Second, legal professional service provided to B and Company, a firm of advocates, again that is also exempted. Services provided by individual advocate or firm of advocate to another individual advocate or firm of advocates is exempted. So the first point and second point both are exempted. Third, legal professional services provided to Mr. C, an employee. This service is provided to C in a personal legal matter. So other than business entity, again exempted. Services provided by individual advocate or firm of advocate to a person other than business entity is exempted. Then legal professional service provided to D Limited, business entity, a Delhi based company, and the D Limited turnover during previous year is 6 lakhs. So it does not exceed the threshold limit for registration. So what should be taken as a threshold limit for registration? Generally, if not given, we'll take 20 lakhs, because 20 lakhs is the basic general threshold limit. So for registration, so 20 lakhs. So due to that reason, again, this fourth point is also exempted. So fifth one, legal professional service provided to E Limited, business entity, Delhi based company, and their turnover during the previous year is 50 lakhs. So it exceeds the threshold limit. It will be taxable, and it will be taxable under RCM. So in the hands of E Limited. So E Limited is required to pay GST. So first 4 cases, it is nil, nil, nil. Fifth case also supplier nil, but the recipient has to pay GST on that 5 lakhs at the rate of 18%. So therefore, here 5 lakhs into 18%, that is 90,000 will be taken as the answer. Next, question number 16. This question number 16 is related to transportation sector. A Limited collected following sums exclusive of taxes for the month ending April 2023 towards transportation of passengers. Determine the taxable value and GST taking the maximum benefits available under law and ignoring ITC. So, if it is exempted or taxable, we need to check. If it is exempted, otherwise we need to take it into the taxability. So, we need to determine the taxable value and GST. So, what is the GST rate if you see? So, GST rate, stage carriage, contract carriage and radio taxi 5% and all other cases 18%. So, first, transportation of passengers on vessel. Vessel means what? Coastal waters from Chennai to Port Blair. So, within India, transportation of passengers by waterways divided into two. Inland waterways fully exempted. Coastal waters again divided into two. So, that is, so predominantly for tourism purpose will be taxable and otherwise public transportation will be exempted. So, this is not for tourism purpose, therefore, it will be exempted. Then transportation of passengers by vessel, again coastal waters. See, vessel means coastal waters from Chennai to Dubai, India to outside India, we don't have any exemption. So, that will be taxable, okay, that will be taxable. So, Chennai to Dubai, service of 4 lakhs was provided after crossing maritime zone, so entire 50 lakhs will be taxable and on that the rate of GST will be 18%. Why? Because others, na? So, therefore, 18% will be taken, 50 lakhs into 18%, so 9 lakhs like that. Then next, transportation of passengers by vessel from Dubai to Chennai, again this is also not exempted anywhere, so therefore, it will be taxable and the rate of GST will be again 18%. So, service of 6 lakhs were provided after crossing maritime zones, that is irrelevant here. So, entire 40 lakhs will be taxable and so here we need to take it as, so this place of supply is irrelevant, we need to treat it as taxable. So, 18%, so 40 lakhs into 18%, that is 7.2 lakhs will be taken, okay. So, 7.2 lakhs will be taken as the answer. Then transportation of passengers through cruise ships within territorial waters of India. So, territorial waters means inland waters. Inland waters is what? Exempted. So, no need to pay GST with respect to that. It is exempted. Okay. So, one second. Through cruise ships within territorial waters. Sorry, it is not inland waters because territorial waters means what? Seaways. Seaways means after the land mass within 12 nautical miles. So, it is a seaways. Cruise ships are basically for tourism purpose. So, therefore, it will be taxable at 18%. So, 6 lakhs correct, taxable at 18%. Then next, transportation through national waterways. This is exempted. Inland waters, that is exempted. Then metro transport of passengers. Metro, mono and tramway is actually exempted. Metro, mono and tramway is exempted. Transportation of passengers by stage carriage. Which stage carriage? 40% it is AC. So, means entire 10 lakhs will not be taxable. In the 10, we need to take 4 and 6. So, 4 it will be taxable at 5%, whereas 6 will be exempted because non-AC stage carriage is exempted. So, 4 lakhs we will be taxing at 5%, so 0.2 and 6 lakhs will be exempted. Transportation of passengers by non-AC contract carriage divided into two, AC, non-AC, AC always taxable, non-AC again divided into two, that is tourism or hire will be taxable, other case it is exempted. This is for non-tourist purpose, therefore it is exempted. Transportation of passengers by AC contract carriage, don't say anything, it will always be taxable at 5%. So, this 2 lakhs will be taxable at 5%, 0.1. Then next, transportation of passengers by non-AC contract carriage for tourist purposes. Non-AC for tourism also will be taxable and taxable at 5% because contract carriage 5 lakhs into 5%, 0.25. Then next, transportation of passengers by ropeway. So, ropeway, we don't have any exemption with respect to ropeway and all. So, therefore, it will be taxable and the rate of GST will be 18% because it is others na. So, that one will be taxable at 18%. Then, transportation of passengers in radio taxis. Radio taxis always taxable and the rate of GST will be 5%. So, it is given. So, 3 lakhs into 5%. So 0.15. And last, transportation of passengers through metered cab and auto rickshaws. So metered cabs and auto rickshaws will be exempted. So that is with respect to this, and the total slight change is there. So 10.96 plus 7.2. 10.96 plus 7.2, 18.16. 18.16 will be taken as the GST. Okay, say this question number 17. The Resident Welfare Association of Blue Heaven Housing Society in Delhi provides the following information with respect to various amounts received by it in the month of January 2019. Monthly subscription collected from member families 8,500 each from 100 families. So we have one exemption, that is Resident Welfare Association collecting up to 7,500 rupees per month per member is exempted, but here it is 8,500 rupees. So definitely it will be taxable. Okay, so therefore this 8,50,000 will be taxable. And then electricity charges levied by State Electricity Board on the members of Resident Welfare Association, the same was collected from the members and remitted to the board on behalf of the members. Actually this EB charges is on the members of the Resident Welfare Association. So therefore this will be coming under expenditure incurred as a pure agent. So this will not be treated as incidental expenses or other expenses charged by supplier to recipient before delivery of goods or supply of service. So this is expenditure incurred as a pure agent and it will not be included in the value, because so directly the bill is raised to the members, but the association is paying and in turn recovering it from the members, so that will not be included. Then electricity charges levied by State Electricity Board on the Resident Welfare Association in respect of electricity consumed for common use of lifts and lights in the common area. But here the bill is raised in the name of association and association paid the bill and in turn recovered it from the members. Already per month it exceeded 7,500. So therefore it will be also taxable. Suppose if this amount is 6,500, then what we need to do? So 6,500 per member na, then 4 lakhs. 4 lakhs divided by 100 families, that is what? 4,000. So 6,500 plus 4,000 per month they are collecting how much? More than 7,500. So therefore it will be taxable. Okay, entirely taxable. So here per month per member, if it exceeds 7,500, it will be taxable fully. So here already the maintenance charges itself exceeds 7,500. So therefore this 4 lakhs also will be taxable. Then proceeds from sale of entry tickets to a cultural program conducted by Resident Welfare Association in the park of Blue Heaven Housing Society. So sale of entry tickets, so we don't have any exemption with respect to cultural program. So this will be taxable. This is a separate activity. Then proceeds from sale of space for advertisement in the members directory. Again, so we don't have any exemption with respect to that and it's a separate activity. It will be taxable. Okay. So therefore whatever amount that they are collecting monthly basis from the members, apportioned expenditure. Okay. Apportioned expenditure, not separate activities. So this cultural event or members directory, etc., not that. So cultural the apportioned amount, common expenses incurred and apportioned between the members, total you take divided by number of members. So per member, if it exceeds 7,500, that will be fully taxable. Okay. If it does not exceed 7,500 per member, then it will be exempted. So therefore here except 3,50,000, everything we will take, and total value of taxable supply will be 15,90,000. Then question number 18. Vimala Transports and Company, a partnership firm based at Chennai, is running a regular tourist bus service carrying passengers and goods from Chennai to Bengaluru in Karnataka state and Trivandrum in Kerala state with effect from 1st September 2021. The firm wants to know whether such interstate movement of various modes of conveyance carrying goods or passengers are both between distinct persons as specified in section 25 subsection 4 of CGST Act is coming under IGST. You are required to advise the firm suitably. First, we have section 7(1)(c), any transaction involving goods or services between the distinct persons is treated as supply, and even though without consideration, but it should be in the course or furtherance of business. Who are treated as distinct persons as per section 25? So one registration of a person to their another registration is known as distinct person. So any transaction between distinct persons involving goods or services, even though without consideration but in the course or furtherance of business, constitutes supply under 7(1)(c). However, we have a circular, CBIC circular, which states that if there is a mere movement of conveyance between the distinct person carrying the people or the goods, but so only mere movement of the conveyance, it is not treated as supply, but the GST will be payable on the goods which are carried between the distinct persons. Okay, so applying that circular, so in the present case it is not a supply. So here few points are given. First, section 24, a person making interstate taxable supply is required to get registered whenever their threshold limit exceeds 20 lakhs, whenever their aggregate turnover exceeds 20 lakhs. So they are not compulsorily required to get registered. Then as per section 25, who are distinct persons is given. Then schedule 1, transaction between distinct persons, and 7 subsection 2, that government activity is excluded from supply. Fine. So here there is one circular which says that interstate movement of goods, okay, movement of goods like movement of various modes of conveyance between distinct persons, so including the bus service, may not be treated as supply, and consequently IGST will not be payable. So what is that? Interstate movement of conveyances either carrying goods or passengers or for repairs from one distinct person to another distinct person, so will not be treated neither as supply of goods nor as supply of service. Okay. Then next, question number 19. Rudraksh Kapoor, owner of Rudra's Publishing House, Ghaziabad, UP, donated some money to a Divya Prakash Charitable Trust in the memory of his late father. The Divya Prakash Charitable Trust constructed a room in the school run by it from such donation and wrote, donated by Rudraksh Kapoor in the memory of his father, on the door of the room so constructed. Examine whether the money donated by Rudraksh Kapoor is leviable to GST. So in this case, what happens is that donated by Rudraksh Kapoor in the memory of his father. So generally donations are divided into two: conditional donation, unconditional donation. Conditional donation treated as consideration. So conditional donation means what? There is an obligation to do something in return to that consideration, in return to the donation. Then it is called as conditional donation, and conditional donation treated as consideration, and that will become supply under 7(1)(a). Whereas unconditional donation, there is no obligation to do anything in return for the donation. So unconditional donations not treated as consideration, and consequently it is not a supply. So here what has happened is that, so display of name, whether display of name is conditional or unconditional, display of name voluntarily out of gratitude, so not as a compulsion. Now whether the display of name gives a business advantage to the donor, no, because the words written are donated by Rudraksh Kapoor in the memory of his father, but there is no business advantage. So it is like unconditional donation, not treated as consideration, consequently it is not a supply. Okay, so that is the answer for that, not leviable to GST. In the above question, if Divya Prakash Charitable Trust has written on the door of the room constructed in the school run by it from the money donated by Rudraksh Kapoor, donated by Rudraksh Publishing House, Ghaziabad, then it will become supply. So then it will become, because display of name gives a business advantage to the donor, Rudraksh Publishing House. So therefore it is treated like a conditional donation, and that will be treated as consideration, and it will become supply under 7(1)(a) and chargeable to GST. So that is the answer for this. Then question number 20, Diligent Force, a professional training institute, gets its training material of aptitude quotient printed from Durga Printing House, a printing press. The content of the material is provided by the Diligent Force, who owns the usage rights of the same, while the physical inputs including paper used for printing belong to the Durga Printing House. Ascertain whether supply of training material by Durga Printing House constitutes supply of goods or supply of services. So now here this Durga printing house, so whenever they give the printing work, okay, in the printing work there are two elements. What are the two elements? Goods element is paper, and the printing and the other binding element will be coming under services, okay. So now there is goods element and service element. We have a CBIC circular which says that we need to classify based on composite supply. So in case of books, what constitutes the principal supply? The principal supply is not paper and ink. The principal supply is the service element, printing. So therefore it will be treated as supply of service, okay. That's what we need to write. For example, if it is tissue papers, etc., the principal supply is goods, so therefore it will be classified as supply of goods. Then question number 21, AB Private Limited, Pune, provides housekeeping services in Maharashtra. The company supplies its services exclusively through an e-commerce website owned and managed by High-Tech India Private Limited, Pune. The turnover of AB Private Limited in the current year is 18 lakhs. So we have total 4 activities in case of section 9 subsection 5, where liability to pay GST is on e-commerce operator. HATE, H for housekeeping service, A for accommodation service, and T for transportation of passengers in any motor vehicle, and E for eating food from a restaurant. Now these 4 services will come under 9 subsection 5 if the first 2 cases supplier is unregistered. So in this case, AB Private Limited is providing housekeeping service through e-commerce operator. What is their aggregate turnover? 18 lakhs. So what is the general aggregate turnover for services? 20 lakhs. As their aggregate turnover does not exceed 20 lakhs, they are not registered. As they are not registered, supplier is not registered and providing housekeeping service through e-commerce operator, liability to pay GST is on that e-commerce operator, that is High-Tech India Private Limited, Pune, is required to pay GST as per 9 subsection 5, e-commerce operator. Will your advice be any different if AB Private Limited sells ready-made garments through e-commerce website? So in case of supply of goods through e-commerce operator, liability and supply of other than these 4 notified services through e-commerce operator, liability to pay GST is on supplier only, not on e-commerce operator. So the supplier AB Private Limited only will be paying GST, and in case of supply of goods through e-commerce operator, they are compulsorily required to get registered irrespective of the threshold limit. So AB Private Limited is compulsorily required to get registered and they will pay GST, whenever they are making supply of goods through e-commerce operator. So this is related to that e-commerce transactions. Then question number 22, determine the person liable to pay GST and the extent of GST payable in the following cases. So GIC, insurance company, pays commission. So insurance services, life insurance or any insurance service, commission to insurance agent, liability to pay GST is on insurance company because it will come under RCM. So insurance company is required to pay GST under RCM. Service provided to an individual by way of sponsorship of events. So in this case, who will pay GST? Sponsorship of events. Again, liability to pay GST with respect to sponsorship of the events is on e-commerce, sponsorship individual, recipient. So as the recipient is individual, it will be covered under RCM or FCM. So only if the recipient is other than body corporate or firm, it will be FCM. If the recipient is body corporate or firm, it will be RCM. So in this case, the supplier, service provider is only required to pay GST. Service provided to a company by way of sponsorship service. So who is the recipient? Company. So therefore it will come under RCM. Then service provided to a director of a company to the company. So company is required to pay GST under RCM. Director service to company or body corporate is covered under RCM. Support service provided by government to business entity. Business entity will pay GST under RCM. Any service provided by government to business entity. Royalty paid by TMN publication to author. Author is unregistered. So in case of copyright services in relation to original literary, liability to pay GST is on the recipient. So liability to pay GST is on the publisher, in this case under RCM. Author is unregistered. Author is having an option to pay GST under FCM, but he can choose that option only when he is registered. In this case, the author is unregistered, so that's why it will be coming under RCM. Renting of immobile property services provided by government to registered business entity 10 lakhs. So in this case, renting of immobile property service provided by government to registered business entity. So government to registered business entity will be covered under RCM, only unregistered will be FCM. Manpower supply service by an individual to a business entity being a company. So manpower supply service we don't have under list of service for RCM, it is only security agency service, but manpower supply service we don't have, so consequently it will be FCM. Security services, yes, security services by an LLP other than body corporate to registered business entity, yes, it will come under RCM. Then security service by company, no, because in case of security agency services, supplier should be other than body corporate and recipient should be registered person. In this case, supplier is body corporate, so that's why it will not be coming under, so RCM, it will be FCM. Then works contract service provided by an individual to business entity being a company 4 lakhs. Works contract services provided by individual to business entity. So we don't have any RCM with respect to works contract service, it will come under FCM. Service by an individual recovery agent to bank. Recovery agent to bank is covered under RCM. Insurance agent to insurance company, recovery agent to bank, financial institution, NBFC, and direct selling agent to bank or financial institution other than body corporate or firm, and then business facilitator to banking company, agent of business correspondent to business correspondent. So it will be this case, it is RCM, 12th point. So like that we need to write what is the value, what is the tax, and who is liable to pay GST. Then next one, question number 23, Messrs. Gyan Publishing House, a registered under GST in Delhi, is engaged in printing and selling of books as well as trading of stationery items. He has provided following information of a consignment which is to be supplied to Mumbai. Taxable value of the supply is indicated on tax invoice is 35,000 rupees. And value of exempted supply is 8,000 rupees. Value of goods to be sent to job worker on delivery challan 15,000. Calculate the consignment value for the purpose of generating e-way bill. So generally, when we need to calculate the consignment value, we should not take the exempted supplies. So in a particular document, if there are both taxable supplies as well as exempted supplies, don't take exempted supplies, take only the taxable supplies. Okay, and taxable supplies we need to add the GST. So what is the rate of GST? 18%. So plus 18%. So that will come to 35,000 plus 18%, that will come to 41,300. So 41,300 will be taken plus goods sent on job work. In two cases, like e-way bill is always required, that is in case of handicraft goods and goods sent on job work. But goods sent on job work is not a supply, even then e-way bill is required. So therefore for this 41,300 you add 15,000. So what is the total value? The total value is 56,300, as the 56,300 per document exceeds 50,000. So while computing the value for the purpose of e-way bill, if it exceeds 50,000, then e-way bill is required, and we need to add the GST in case of goods sent on job work. Even if the value, suppose for example, here the value does not exceed 50,000, but we are sending the goods on job work, whether e-way bill is required? Definitely e-way bill is required in that case. Okay. Then next one, question number 24. Happy Company is a registered supplier of electronic goods. It has 3 stores for electric goods in Jodhpur, Rajasthan, namely Ram Store, Sham Store and Mohan Store. It receives order for supply of electronic goods worth rupees 1,40,000 exclusive of GST at 18% from Kishan Sons of Bhopal, Madhya Pradesh. Happy Company found that order worth 43,000 can be fulfilled from company's Ram Store. Order worth rupees 45,000 can be fulfilled from Sham Store, and remaining goods worth rupees 52,000 can be sent from Mohan Store. So there are 3 stores for them. So 3 stores are in different places. So Ram Store 45, Sham Store, sorry, Ram Store 43, Sham Store 45, and Mohan store 52,000. These are all exclusive of GST. Now add GST, because even though there is a single invoice, but when the goods are dispatched in different consignments, we need to prepare e-way bill separately only. Okay. So therefore, as the goods are starting from one location to another location, as the movement is in different cases, different places, so therefore we need to take 3 different e-way bills, but e-way bill is required only when the value of supply exceeds 50,000, but while doing the value of supply, we need to add GST. So first one 43,000, 43,000 plus 18% will be 50,740. Definitely e-way bill is required. And next case 45,000 plus 18%, that is 53,100. e-way bill is required. Last case also e-way bill is required. So in this case 3 e-way bills is required. What if one consignment value does not exceed 50,000? For that, supplier is not required to prepare e-way bill, but the transporter who transports these 3 consignments in a single lorry will definitely prepare e-way bill, because cumulatively the value exceeds 50,000. So individually, if each invoice value does not exceed 50,000, the supplier will not prepare e-way bill, but cumulatively if all these consignments transported in a lorry or a vehicle exceeds 50,000, so then the transporter has to prepare the e-way bill for each consignment. Okay, that is with respect to this. And in this case 3 consignments, value add GST, so starting point and ending point, so therefore e-way bill, 3 e-way bills are required in this case. Then next one, question number 25. Padmavati Traders, registered in Karnataka, is engaged in supply of taxable goods. Its turnover in the preceding financial year was 230 lakhs and was furnishing its GST return on a monthly basis. So they were going for monthly GSTR. In the beginning of April month in the current financial year, it sought advice from its tax consultants, Dua consultants, whether it can furnish its GST returns on a quarterly basis from now onwards. So Dua consultants advised Padmavati Traders that it cannot furnish its returns on a quarterly basis, as the GST law does not provide for quarterly return under any circumstances. Discuss the technical veracity of the advice given by Dua consultant. See, if any registered person whose aggregate turnover during the previous year does not exceed 5 crores, then during the current year they can go for quarterly return monthly payment option. And in this case, Padmavati Traders turnover during the previous year is only 230 lakhs. It does not exceed 500 lakhs, 5 crores. So current year, in the beginning of the April month, for the first quarter, they can go for QRMP and they can file their GSTR1 by 13th of the month following every quarter, and GSTR 3B, they are in Karnataka South. So therefore 24th of the month following every quarter. And they can choose this QRMP with respect to GSTIN wise. So like suppose if Padmavati Traders is having different registrations, with respect to each registration they can choose whether they need to go for QRMP or not. And in the current year, in any quarter, if the aggregate turnover exceeds 5 crores, from the next quarter onwards, they will be coming out of the QRMP option and they need to file returns on a monthly basis. So these are the details that we need to, give here. Okay. So next one, question number 26. Measures ABC has a turnover of 5 crores in a previous financial year. For April 2021, following are the scenarios. Export turnover 3 crores, exempted turnover 2 crores, taxable turnover 40 lakhs. Now, check whether for December 2021, Rule 86B applies, that is restriction of 1%. So, as per Rule 86B, we have to pay 99% of our liability through credit ledger and 1% of our gross liability through cash ledger. Which liability? Only taxable turnover. Don't take exports also. So therefore, what is the taxable turnover? Don't take exports and don't take exempted. So taxable turnover 40 lakhs. 86B not applicable, because 86B applicable if the taxable turnover in a month exceeds 50 lakhs. In this case, the taxable turnover is what? Only 40 lakhs. So Rule 86B is not applicable. Whereas in the second case, so taxable turnover in a month exceeds 50 lakhs. So Rule 86B will be applicable in this case. Now, out of that 40 lakhs, whatever is the GST liability in that, so we have to pay mandatorily 1% through cash ledger. If you pay more than 1% through cash ledger, okay. Even if there is enough balance in the credit ledger, 1% has to be paid through cash ledger only and remaining through credit ledger. Okay, minimum 1%. If you want to pay more than 1%, it is okay. Okay, and don't take RCM liability here, because RCM is inward supply. In turnover, we will not take inward supply. RCM liability always we have to pay from cash ledger only. Then question number 27, determine the amount to be paid through electronic cash ledger for Messrs A Limited, assuming it is not covered by exception to Rule 86B. For Rule 86B, we have some exceptions. So like for central government, state government department, local authorities, statutory body, public sector undertaking, and even for if cumulatively you have already paid 1% through electronic cash ledger from April to the current month, so then you don't have to. Or if you paid income tax more than 1 lakh in the 2 preceding financial years, or you are eligible for a refund greater than 1 lakh in the preceding financial year. So these are some exceptions. So it is not covered under that exceptions is what they are telling. Now, export turnover under bond or LUT, don't take that. Don't take that. Export turnover with payment of IGST, that also don't take for 86B. Supply of goods or service or both to SEZ, zero rated supplies don't take. Exempted turnover don't take. Non-taxable supplies also don't take. Taxable turnover alone, you see, how much is the taxable turnover? 1 crore. On that 1 crore, what is the rate of GST? 18%, means 18 lakhs. So 18 lakhs, even though we have 20 lakhs ITC, but out of that 18 lakhs, and in a year, whether the turnover, monthly turnover in the month exceeds 50 lakhs, yes, taxable turnover in the month exceeds 50 lakhs. So 18 lakhs into 1%, 18 lakhs into 1% is what? 18,000. That 18,000 should be paid through cash ledger, and remaining 17 lakh 82,000 will be paid from the credit ledger, and still 2 lakh 18,000 will be there in the credit ledger. But what about this zero rated supplies upon payment of IGST? That normally we can pay using credit ledger or cash ledger, whatever it may be. But so the other liability, that is FCM liability, other than zero rated supplies, 1% through cash ledger and remaining 99% through credit ledger. That is this. Then question number 28, Apte and Apte Limited is located in India and holding 51% of shares of Wilson Limited, a USA based company. Wilson Limited provides business auxiliary services to Apte and Apte Limited. So generally in case of holding and subsidiary company, so import of services, so will be treated as like associated enterprises, because this question is based on time of supply. So section 13, time of supply in case of services is to be determined as per section 13. As per section 13, subsection 3, time of supply in case of import of service RCM will be date on which payment is made to supplier, or 61st day from the date of invoice, whichever is earlier. But if it is import of service from associated enterprises, date on which payment is made to supplier or date of entry in the books of the recipient, whichever is earlier. So what is the date on which payment is made to supplier? So 23/3/2021. Okay. Date on which entry is made in the books of the recipient. So that is 30/12. Whichever is earlier, that is 30/12 will be taken as the time of supply. Okay. So we will not take that 61st day from the date of invoice. That is normal RCM. But in case of import of service from associated enterprise, we need to take associated enterprise is as per section 92A of Income Tax Act, so that we don't have for intermediate. But you remember 26%, if one entity holds more than 26% in the other entity, it will become associated greater than or equals to 26%. So here 51%, so definitely they are associated enterprises. That's why this exception will be applicable. Then question number 29. Neelkant Private Limited, a registered supplier of goods and services at Kolkata, has furnished the following information for the month of February. Intrastate supply of taxable goods, including 1 lakh, received as advance in January. The invoice for the entire sale value is issued on 15th February. So in case of goods, GST is payable on advances? No. So the time of supply in case of goods is actual date of invoice or due date of invoice, whichever is earlier, which means GST not payable on advances. So in this case, 4 lakhs. So 1 lakh received as advance in January. They are asking for February. So they are asking for February. So that 1 lakh will not be taxable in January. The entire 4 lakhs will be taxable in the month of February itself. Okay. So that 4 lakhs will be taxable, and it is what supply? Intrastate. So CGST, SGST. So first one will be 4 lakhs, CGST 9%, SGST 9%. So 36,000, 36,000. Then second transaction. Purchase of goods. This is inward supply. First one is outward supply. First one is outward supply, and the second one is inward supply. So purchase of goods from a composition dealer registered in Kolkata. So first of all, person opting for composition scheme cannot charge GST to the recipient. Okay. So here, so 5,50,000, first of all, they have not paid any GST. So the question of ITC will not come. So it is an inward supply, and for the purpose of ITC, it will not be taken. Purchase of goods from a person opting for composition scheme. Okay. Then next one. Service provided by way of labor contract for repairing a single residential unit otherwise than as a part of residential complex. So repairing a single residential unit is not exempted. Only construction of a single residential unit is exempted. So this will be taxable, and this is outward supply. This is outward supply. On this, GST is payable intrastate. So 1 lakh into 9%, 9%, 9,000 and 9,000. Second point. Okay. Then next one. Membership of a club. Availed. So receipt. So this will be inward. Membership of a club. Availed for employees working in a factory. It is an intrastate transaction. So inward supply, CGST, SGST is paid. So 1,75,000 into CGST, SGST 9% and 9%. Membership of a club, health and fitness center. So, but it is a blocked credit. We cannot take ITC with respect to that. And nowhere it is given, it is under a statutory obligation. So first on this 1,75,000, whether ITC is available? No. It's a blocked credit. ITC not available. Then next one. Goods transport services received from a GTA. So inward, on which we need to pay GST under RCM. GST is payable at 12%. 12% means, so FCM, definitely FCM. So GTA only will pay, because the rates we have now, FCM, RCM, FCM 12% or 5%, 12% with ITC, 5% without ITC, and RCM always 5%. The moment it is 12%, it will be FCM. So GTA has paid the GST, so we don't have to pay any GST under RCM, and this can be taken as ITC, IGST. So 2 lakhs into 12%, 2 lakhs into 12% will be taken as IGST credit, 24,000. Then next one, interstate services provided by way of training in recreational activities relating to sports. So provided by way of training in recreational activities. See, whether it is individual, no. Only individual providing training in arts or sports is exempted. But Nilkam Private Limited is not individual, so therefore it will be taxable. So this is an outward supply, and it will be taxable interstate. So 10,000 into 18%, 1,800. Then next one, interstate security services provided to ABC. This is again provided, means outward supply. So to ABC higher secondary school, security services to school, category 1 education institution only within the premises, security and housekeeping service to category 1 education institution within the premises. If you see here, so it is in an auditorium, so therefore it will be taxable 15,000 into, so again it is intrastate or interstate, so 15,000 into, so 18%, that is 2,700. Then inputs to be received in 4 lots. So this is inward supply, inputs to be received in 4 lots, out of which second lot was received in the month. So means only upon receipt of last lot we can take ITC. Again on this 40,000 we cannot take ITC here. Okay. So 40,000 ITC not available. Then opening balance we have with respect to ITC, CGST 57, SGST nil and IGST 50, so that we need to take it here. So now statement number 1, GST under FCM. We don't have any RCM, so therefore statement 2 is not there, only statement 1. So this is like consolidated questions. So whenever you prepare the answers for this consolidated question, you need to do it in 4 steps, 4 statements. Statement number 1, statement showing GST payable under FCM. So GST payable under FCM is what? CGST 45,000, SGST 45,000, IGST 4,500. Statement 2, GST payable on inward supply under RCM. We don't have anything. Then next one, so we have input tax credit as the statement 3, opening balance plus ITC. So 57,000 CGST, SGST nil and IGST 74,000. Now statement 4. Statement 4 is net GST payable. Net GST payable, first gross liability. Gross liability how much? 45, 45 and 4,500. Which credit we need to exhaust first? IGST credit we need to exhaust first, 74,000. Equally we will utilize for payment of CGST, SGST. First we need to use it for payment of IGST. So out of 74,000 minus 4,500 we are utilizing for payment of IGST. Remaining we have 69,500. That 69,500 divided by 2. So 34,750, 34,750 CGST and SGST. So it will be adjusted. Or it can be used for payment of SGST and then we can use it for payment of CGST. Why we are doing that? Because if you see the question, they are asking compute the minimum GST payable. If you see SGST credit we don't have, but SGST liability we have. So therefore IGST credit first we need to use for payment of IGST, then try to use for SGST because CGST credit we already have. So try to exhaust IGST credit for SGST liability. So therefore 74,000 minus 4,500 minus 45,000 we will use. So still we have 24,500 that we will use for CGST. Then CGST credit we have 57,000 because CGST credit cannot be adjusted with SGST liability, that's why. So CGST credit also utilized. So therefore minimum GST payable in cash will be nil. So we don't have to pay any GST here. Suppose if there is RCM liability, what we need to do? That RCM liability always we should pay by cash, and first we need to take statement 1, FCM liability minus input tax credit. So then net liability under FCM, add RCM liability, then only we will get, so total liability, net liability payable. Okay. Continuing with mighty 50 questions, the next question, question number 30. Rimjim Sales, a registered supplier, receives 100 invoices for inward supply of goods or services involving a GST of 10 lakhs from various suppliers during the month of January 2022. Out of these 100 invoices, details of 80 invoices involving GST of 6 lakhs have been furnished by the suppliers in their respective GSTR1. So how much credit can be taken now? Only matched ITC can be taken. So what is matched ITC? So that ITC which is reflected in GSTR2B. How it will be reflected in GSTR2B? If the suppliers have filed their GSTR1 by due date, then it will be reflected in GSTR3B. Okay. So suppliers in their respective GSTR1s filed on the prescribed due date, therefore, and such details have also been duly communicated to the recipients of such invoices in form GSTR2B. Only 80 invoices. So having a ITC, GST of 6 lakhs. So which means what is a matched ITC in this case? The matched ITC in this case is only 6 lakhs. So 6 lakhs only can be availed as ITC. And can we take remaining 4 lakhs as ITC? No. So compute the ITC that can be availed by Rimjim Sales in GSTR 3B for the month of January. So only 6 lakhs. Then what about this 4 lakhs? They cannot take ITC. But when they can take ITC? As and when. So it will be like GSTR1 is filed by the suppliers pertaining to that particular month. Okay. So that is for January 2022. As and when the suppliers are filing GSTR1. So at that time, so these people will be in that month, they will be able to take the ITC in their GSTR2B from there in 3B. Okay. So therefore only 6 lakhs can be taken as ITC in this case. Then next question, question number 31. And the section reference that we need to give in this case is section 41, the amended section as per Finance Act 2022 applicable for your exam is section 41. Then question number 31. Examine whether the supplier of goods is liable to get registered in the following independent cases. Rudra Builders of Rohini, Delhi is exclusively engaged in intrastate taxable supply. So they are making intrastate taxable supplies of building bricks. Its aggregate turnover in the current financial year is 23 lakhs. So actually in Delhi, the applicable threshold limit if they are exclusively engaged in supply of goods is 40 lakhs. But there are some notified goods. So suppliers of those notified goods will not get 40 lakhs threshold limit. So 20 lakhs only will be taken. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. So they are engaged in building bricks, trading of supply of building bricks. So they will not get 40 lakhs as the limit. So only 20 lakhs will be taken as the applicable threshold limit, and their turnover during the financial year is 23 lakhs. As it exceeds 20 lakhs, so they are required to get registered. Then number 2, Hira of Himachal Pradesh is exclusively engaged in intrastate taxable supply of footwear. His turnover in the current financial year from Himachal Pradesh showroom is 32 lakhs. He has another showroom in Nagaland with a turnover of 11 lakhs in the current financial year. So therefore, in this case, what will be taken? So first we need to see what is the applicable threshold limit. So they are doing business in more than one state, and one of the state is a special category state. What is that? MMTN, Manipur, Mizoram, Tripura, Nagaland. So Nagaland is a special category state. So in case of Nagaland, what will be taken? So as it is a special category state and taxable supplies are made from that state, the applicable threshold limit will be 10 lakhs. So because taxable supplies are made from Nagaland, 10 lakhs is the applicable threshold limit, and their aggregate turnover exceeds 10 lakhs. So due to that reason, they are required to get registered in both Himachal Pradesh and Nagaland. Okay. So further, he is required to obtain registration in both Himachal Pradesh and Nagaland, as he is making taxable supplies from both the states. That is the answer for this. Then question number 32, Fashion Queen Limited, registered under GST and dealing in baby products, has an aggregate turnover of 40 crores in the preceding financial year. The tax consultant of Fashion Queen Limited advised it to issue e-invoices mandatorily. However, Fashion Queen Limited is of the view that since its aggregate turnover is less than the threshold limit applicable for e-invoicing, it is not required to issue e-invoices. You are required to comment upon the validity of the advice given by the tax consultant. So Fashion Queen Limited is of the view that since its aggregate turnover is less than the threshold limit for e-invoicing, it is not required to issue e-invoices. So what is the applicable limit for e-invoicing? 10 crores. If any registered person whose aggregate turnover starting from 2017-18 onwards exceeds 10 crores, then with effect from 1/10/2022, so they are required to give e-invoice for B2B supplies. In this case, Fashion Queen Limited aggregate turnover during the previous year is more than 10 crores. So definitely they are required to give e-invoice with respect to their B2B supplies. Okay. So outward supplies to a registered person. Then second part in this question is that Ministry of Communications and Information Technology, a government department registered under GST, has an aggregate turnover of 52 crores in the preceding financial year. You are required to comment whether Ministry of Communications and Information Technology is required to issue e-invoices in the current financial year. So actually we have exceptions for e-invoice. So every registered person whose aggregate turnover during the preceding financial year from 2017-18 to 2021-22, any 1 year, if it exceeds 10 crores, then they are required to give e-invoice. But even if the turnover exceeds 10 crores, there are few people who are not required to give e-invoice. Who are they? So we have, biggest, B for banking company, I for insurance company, G for government department or local authority, another G for GTA, and E for exhibition of film in a multiplex theatre, S for SEZ unit, and T for transportation of passengers by any mode. So these people, in this case, Ministry of Telecommunications and Information Technology is a government department. So central government department or state government department is not required to give e-invoice. So that is this. So these are the entities which are not required to give e-invoice, and Ministry of Communications and Information Technology, being a government department, is not required to issue invoice in the current financial year. Then question number 33. Sundar is HRD head of Infosys. For the year ending 31st March 2019, CTC means cost to company of Sundar as per the employment agreement is as follows. Salary 2 lakh per month, so 24 lakhs. Residential accommodation 6 lakhs. Conveyance facility 3 lakhs, so total 33 lakhs. Now, is it treated as supply or not a supply? As per section 7, subsection 2, read with schedule 3, services provided by employee to employer in the course of employment is excluded from supply. Now, apart from salary, if any amount is paid by the company employer to the employee, so then in that case, so we need to check, is it part of CTC or not? Because we have one CBIC circular which says that if any perquisites given by employer to employee which form part of the offer document, that will also forming part of salary and it will not be treated as supply. So this residential accommodation and conveyance facility which is given by employer to employee is part of CTC. As it is part of CTC, so that will not be taken into consideration here. Okay. So on January 1st, 2019, Infosys gives a new car to Sundar worth rupees 12 lakhs. Gift of car is not covered by CTC as well as employment agreement. What about that? So that is not covered under employment contract or CTC, which means it will be treated as gift. So gift by employer to employee, if it exceeds 50,000 per annum per employee, then it is treated as supply. So what is the value of the gift here? 12 lakhs exceeds 50,000. So it will be treated as supply. Now this is by that company Infosys to Mr. Sundar. Now Sundar owns a commercial flat. So far what we have seen is from the company perspective. Company perspective, Sundar, CTC not covered under supply, but gift given by employer to employee, employer has to pay GST on the gift. Now Sundar owns a commercial flat. He has given on rent to Infosys, monthly rent being 3 lakhs. Discuss whether GST is applicable. Determine the amount of GST liability assuming the rate of GST as 28% for car and 18% for others. So therefore here Mr. Sundar is giving the commercial flat on rent to Infosys. So renting of immovable property for, it may be a residential property, but given on rent for what purpose? Commercial purpose. So therefore it will be taxable. Okay. But here the supplier will pay GST or the recipient will pay GST. Actually we have now one latest amendment which says that renting of residential property for residential purpose to a registered person. So he owns a commercial flat, not a residential flat. That's the reason why we are not applying RCM. So RCM, when we will apply residential property for residential purpose to a registered person, then only RCM. But here it is what? Commercial flat. So which means RCM will not come. Renting of commercial flat always will be taxable. Okay. Then who will pay GST? Mr. Sundar has to pay GST. But sir, what if he is not registered? He is not required to pay GST. Only when he is registered, he is required to pay. Otherwise, he is not required to pay. If you see the rent here, the rent is what? 3 lakhs. So 3 lakhs per month. 3 lakhs per month into 12 months. So that will be easily 36 lakhs. The rent itself will be 36 lakhs. So definitely it exceeds the threshold limit. So therefore, he will be required to register and pay GST. But here they are asking only about, so whether GST taxable or not, whether he pays GST or not is different situation. Whether it is taxable or not, yes, it will be taxable. So that's what I have given here. So residential accommodation, one second. So rent received, transaction. So here GST at the rate of 18% is payable. Presume that Sundar is not opting for the benefit of threshold limit, which means what? He crossed the threshold limit and is required to pay GST. So therefore, rent received we discussed, salary also we discussed, and the other perquisites given by the employer to employee. So that is the answer for this. It's a very good question. Then question number 34. Shivaji Private Limited, a registered supplier, supplies the following goods and services for construction of buildings and complexes. Excavators for required period at per hour rate and manpower for operation of the excavators at per day rate. Soil testing and seismic evaluation at a per sample rate. Okay. The excavators are invariably hired out along with operators. Similarly, excavator operators are supplied only when the excavator is hired out. So which means hiring of excavators and manpower supply for that excavators is naturally bundled. How it is naturally bundled? See this line. the excavators are invariably hired out along with the operators. Similarly, excavator operators are supplied only when the excavator is hired out. So, which means that this is naturally bundled in the ordinary course of business. Okay. So, therefore, excavators rate is what? Excavators rate, hiring of excavators is 12%. Hiring of excavators 12%, supply of manpower for excavators 18%. Both are taxable, naturally bundled in the ordinary course of business. The principal supply is hiring of excavators. So, entire amount. So, for hiring of excavators 18 lakhs and service charges for manpower 20,000. So, 18 lakh 20,000 will be taxable at the rate principal supply, that is 12%. So, 18 lakhs also taxable at 12%, 20,000 also taxable at 12%. Whereas, soil testing and seismic evaluation is independent activity. So, that is no way connected to this. So, that's independent activity will be taxable at the rate applicable to it, that is soil testing and seismic evaluation at 3 sites, 2,50,000 into 18%. So, total GST liability will be 2,63,400. So, this is a question related to composite supply concept. Then, question number 35. So, it's a little big question. Andes Private Limited, a registered supplier, manufactures product A and product B. Well, product A is taxable under forward charge, B is taxable under reverse charge. The following details are provided in relation to two individual supplies of product A and product B made by the company. So, we have different informations here. Now, what is it we need to determine? Determine the time of supply of goods for the purpose of payment of tax. Okay. So, now if you see product A, so product A is covered under FCM. So, therefore, how to determine the time of supply? The time of supply is determined under section 12 because it is goods na, goods covered under FCM 12 subsection 2. So, what will be taken as the time of supply? A, due date of invoice, or B, actual date of invoice, whichever is earlier will be taken. Okay. So, product A which is covered under FCM, time of supply is under section 12 subsection 2. So, either it will be due date of invoice or actual date of invoice, whichever is earlier. So, what will be taken as the due date of invoice? Okay, that we will see. So, first due date of invoice, supply involves movement of goods or supply does not involve movement of goods, we need to check first. If supply involves movement of goods, due date of invoice is at the time of removal. If supply does not involve movement of goods, at the time of delivery. If you see here, product B, product A, so product A payment made 1 lakh by the buyer. So, wherever product A is there, just check there. Okay. So, product A payment made, then next again product A manufactured and removed. Okay. So, supply involves movement of goods. So, supply involves movement of goods, what will be taken as the due date of invoice at the time of removal. So, therefore, 5th March will be taken as the due date of invoice, 5th March. Then, actual date of invoice, what is the date on which invoice is issued for A? So, receipt of product A, okay, then product A invoice is dated 4th March. So, therefore, 4th March will be taken as the actual date of invoice, whichever is earlier. Therefore, 4th March will be taken as the time of supply with respect to product A. Then, with respect to product B, product B is covered under RCM and time of supply is determined under section 12 subsection 3. So, what will be taken as the time of supply in case of product B which is covered under RCM? So, first we need to take A, that is date on which goods are received, date of receipt of goods, and then B, date of payment to supplier, and number 3, so that is C, 61st or 31st. In case of goods, we need to take 31st day from the date of invoice. 31st day from date of invoice, whichever is earlier will be taken. Okay. Now, if you see here, the payments are two different payments are there. That is 1 lakh made by the, that is 2 lakhs made by the buyer for supply of product B. So now you see with respect to product B, 2 lakhs for product B delivered in the month of March. So 17th February itself. And for product B, so invoice is for 4 lakhs. So which means there are two payments, advance 2 lakhs and balance 2 lakhs. So there are two payments here. One is advance and the other one is balance. So for advance 2 lakhs, what is the date of payment to the supplier? So 2 lakhs is paid on 17th February for advance. Then what is the date on which the balance amount is paid? So balance amount, if you see, so product B, payment made by the buyer on 1st April. So which means that will be the balance amount. So 1st April will be taken. 1st April. Now, in both the cases, the date of receipt of goods will be same. So check when the product B is received. So product B is manufactured and removed. Product B is received on 23rd March. So that will be common for both the cases. So 23rd March, date of receipt of goods. Okay. Then what is the date of invoice? Invoice for product B is given on 11th March. We need 31st day from the date of invoice. In the month of March, so 31 minus 11. So we got 20 days. So in the month of April, 11. So therefore 11th April will be taken as the 31st day. Okay. So therefore 11th April will be taken as 31st day. So now whichever is earlier. So what will be taken as the time of supply in case of advance? In case of advance, whichever is earlier is 17/2, that will be taken. In the next case, 23 March or 1st April or 11th April, 23 March will be taken as the time of supply. So if you see here, the answer for product A, it is very simple, 4th March. For product A, it is 4th March. Whereas for product B, two things are there. First, with respect to advance, it is 17th February. Whereas with respect to the remaining 2 lakhs, it will be 23rd March. So 23rd March, it is whichever is earlier. So that's how we will determine the time of supply in case of goods which are covered under FCM RCM. So in the same question, both FCM and RCM is given. You stick on to the provision. So as per provision, what you need to know is that, so the provision is date on which goods are received or date on which payment is made to supplier or 31st date from the date of invoice. Just that information if you grab from the question, automatically you will get the answer. Then another question. Question number 36. Renudut Limited enters into contract with XYZ Limited on 2nd July 2019 for a period of 2 years for construction of a new building to be used for commercial purposes for a total consideration of 150 lakhs. As per the terms of the contract, Renudut Limited is required to make the payment at different stages of completion of the building, namely 50%, 75% and 100%. Determine the time of supply using relevant details given as under. So first we need to see, is it continuous supply of service or not? A service which takes more than 3 months to complete and involves periodic payment obligations is known as continuous supply of service. Whether in this case a service takes more than 3 months to complete, enters into contract on 2nd July for a period of 2 years for construction, so more than 3 months, and involves periodic payment obligations, so it is a continuous supply of service. What is the time of supply in case of continuous supply of service? If due date is ascertainable from the contract, that is due date of installment is ascertainable from the contract, the due date of installment is taken as the due date of invoice. And so this is for due date of invoice, but time of supply, we don't have any specific provision for continuous supply of service time of supply. So time of supply is normal. So if payment is made within due date, okay, so that is if invoice is raised within due date, then invoice date or payment date, whichever is earlier. If invoice is not raised within due date, then completion date or payment date, whichever is earlier. This is the provision for time of supply. So the time of supply provision depends upon the due date of invoice. So we need to understand what is the due date of invoice in case of continuous supply of service. So if installment due date is ascertainable from the contract, the due date of installment is the due date of invoice. So suppose if payment is linked to completion of an event, the date on which event is completed, that will be taken as the due date of invoice. in the absence of that information, the date on which payment is received. So that date on which payment is received will be taken as the due date of invoice. Now if you see here, so what they are telling is that payment is linked to completion of an event. So 50%, 75% and 100% as and when it is completed. So like that the payment is connected. So due to that reason, so we need to take the date of completion of that particular event as the due date of invoice. So dates of various stages is given now. This will be taken as the due date of invoice. This will be taken as due date of invoice. Then what is the actual date of invoice? That is also clearly given, actual date of invoice. Now we are moving on to time of supply. So far what we have seen, due date of invoice. Now time of supply. What is the time of supply in case of services covered under FCM? So whether invoice is given within the due date or not, we need to check. If invoice given within due date, then invoice date or payment date, whichever is earlier, first case. So invoice is given within due date. So invoice date, payment date, whichever is earlier, both are same. So therefore 2/7/2019 will be taken as the time of supply. Second, 50% completion. Invoice given within due date? No, invoice not given within due date, because due date is 15/3, but the invoice is given on 22/3. Invoice given beyond due date. Then completion date. What is the completion date? 15/3 or payment date 29/3, whichever is earlier. So therefore we need to take 29/3 or 15/3. 15/3 will be taken. Then 75% completion. So due date of invoice 26, actual date of invoice 24/7. So invoice is given within the due date? No, invoice is given beyond the due date. When invoice is given beyond the due date, what we need to take? We need to take, so here, date of completion or date of payment, whichever is earlier. Again, date of completion is only earlier. Then 100% completion of building 39 and invoice is 39, same date. So therefore invoice is on time. Then invoice date or payment date, whichever is earlier. So 39 or 29, whichever is earlier, 29. So first case 2/7. Okay, first case it is 2/7. Second case it is 15/3. Okay, then third case it is 26, and last case it is 29. So that's how we need to determine the time of supply for continuous supply of services. Then question number 37, the following information is noted from the records of X, a technical consultant located in Mumbai, and Y, a software developer located in Pune. So they gave the details of X and Y. Now what we need to determine for this, see the information below. X got GST registration on 1st July. Y is not registered in GST on April 1st, 2019. He applies for registration by uploading the relevant form on May 20. Registration is granted on May 23. With effect from 1st April, X and Y want to avail the benefit of special scheme notified under section 10(2)(a). So composition scheme under 10(2)(a) is applicable to a service provider. So mainly because, so we have two types of composition scheme, 10(1) and 10(2)(a). So to whom 10(2)(a) is applicable? Manufacturer, trader and any service provider. So basically service providers other than supply of food, so has to come for 10(2)(a). For 10(2)(a), what is the condition? Aggregate turnover during the previous year should not exceed 50 lakhs. Now X is into what business? X is into, technical consultant, and Y is software developer. So both are eligible for 10(2)(a), and X turnover during the previous year. What is the current year? April 1st, 2019 given means current year is 2019-20. So what is the previous year? 18-19. For 18-19, what is their turnover? 43 lakhs. So 43 lakhs means definitely they are eligible for composition scheme during the current year. And during the current year, composition scheme under 10(2)(a), up to what turnover they will be into composition scheme? Again 50 lakhs. After crossing 50 lakhs, they will be going into normal scheme and pay GST at the normal rates. Now, discuss the tax consequences for the half year ending September 30, and the above figures are exclusive of GST. Normal rate of GST is 18%. So now you take first 3. So 3 plus 17, 20, 20 plus 18, 38, 38 plus 12, 50. So up to this, they will be into composition scheme. They will pay GST at 6%. they will pay GST at 6%. After crossing this 50 lakhs, with respect to the remaining turnover, they will pay GST at what rate? They will be paying GST at the rate of regular 18%. Okay. So, up to that turnover, they will be at the rate of 6%, and thereafter they will pay GST at 18%. So, up to this turnover, it will be 6%, and thereafter, after crossing that, it will be 18%. Okay. Now, so because 50 lakhs it crosses. Suppose if this 12 lakhs is 13 lakhs, then if the 12 lakhs is 13 lakhs, then up to the third invoice, 3, 17 and 18, first 3 invoices only they will be into composition scheme, because of a particular invoice, if you are crossing 50 lakhs, from that invoice onwards you will not be into composition scheme. Don't sit in exam and write, okay, we will split the invoice into 12 lakhs one invoice and 1 lakh one invoice. So 12 lakhs composition scheme, 1 lakh will be normal scheme. No, don't do that. So because of a particular invoice, if you are crossing the limit by 50 lakhs, from that invoice onwards, you are disqualified from the composition scheme. So if the 12 lakhs becomes 13 lakhs, means it will be total 51. Because of that invoice, you are crossing 50 lakhs. So up to that, before that invoice, you will be into composition scheme. From that invoice onwards, you will be into normal scheme and you will pay GST at 18%. Then, in case of Mr. Y is commencing business itself current year, and being a service provider, that too located in Pune. Okay, so they are eligible for a applicable threshold limit of 20 lakhs. So first 20 lakhs, they are not required to get registered at all. And after crossing 20 lakhs, they need to register. And for the remaining 30 lakhs, because overall limit for composition scheme is 50. First 20 lakhs, so this 3 plus 7, first 20 lakhs, no GST. No GST. Thereafter 30 lakhs. Because the overall limit for composition scheme is what? 50 lakhs. So first 20 lakhs, no GST. Remaining 30 lakhs, they need to pay GST at 6%. And last 2 invoices, they will be paying GST at what rate? 18%. So that's how we need to do the computation. Okay. So therefore, first 20 lakhs, there is no liability, no need to pay GST. Next remaining 30. And suppose here, if it is not 17 but 18, because of a particular invoice, if you are crossing 20 lakhs, from that invoice onwards you need to pay GST, which means only 3 lakhs no GST, that 18 lakhs, 17 becomes 18 now, from that onwards you need to pay GST at 6% up to next remaining, up to 50 lakhs, okay. So remember that. So this question is based on those points, and the answer we have done. Now next question, question number 38. Miss Nitya has following balances in her electronic cash ledger as on 28th February as per GST portal. Major heads CGST, SGST, minor heads tax, interest, penalty. So we have amounts and IGST also. Her liability for the month of February for CGST, SGST was 75,000 each. So the liability is 75,000. She failed to pay the tax and contacted you as legal advisor on 12th April to advise her as to how much amount of tax or interest she is required to pay, if any, by utilizing the available balance to the maximum extent possible as per GST law. She wants to pay the tax on 20th April, and other information is as follows. So actually this liability pertains to which period? February. For February, what is the due date? Due date is 20th of March. But when are they paying? 20th of April. So there is a delay for 31 days. For this delay, whether interest is payable? Yes, interest is payable. So date of collection of GST 18 February, that's okay, but they should have remitted it by 20th March, but they are paying by 20th April. So in April 20 days, March 11 days, 31 days, we need to compute the interest. Interest on what? Net liability. What is the net liability? The 75,000 is the net liability. But sir, they have not given. We have to assume, because her liability for the month of February is 75,000, which means that itself is the net liability. So on that 75,000, we need to compute the interest. So 18% per annum for 31 days, 31 by 365. So 75,000 into 18% into 31 divided by 365, that will be 1147. 1147 will be taken as the interest. Okay, so if you see the liability, 75,000 CGST liability, 75,000 SGST liability, and 1147 will be interest. So tax 75,000, interest 1147. Same way SGST 75,000, interest 1147. Now this is cash ledger, not credit ledger. If it is credit ledger, first we need to use IGST credit and then CGST, SGST. But here it is not credit ledger, it is what? Cash ledger. Cash ledger, no issue. So respective cell we will use for payment of respective liability. Now go to CGST tax. How much is there in CGST tax? 40,000. Okay. SGST tax 80,000 we have. So first for CGST tax 40,000 and for SGST tax 80,000 we will use. And interest if you see, interest under interest 1,000 rupees for CGST and 400 for SGST, that we will use. Now if you see CGST tax, there is a shortfall by 35,000 and interest there is a shortfall by 147. SGST tax, so there is no shortfall, we have sufficient amount, and interest 747 will be shortfall in case of SGST. Now this particular amount of 35,000 we can source from other ledger, because we have we can source from other cell, because we have one form. What is that form? Form GST PMT 9. Using that form GST PMT 9, we can shift the balances from one cell to another cell in the electronic cash ledger. So in this case, we can shift the balances from one cell to another cell in the electronic cash ledger. So where is that we have excess amount? IGST 45,000 we have excess. So we can source it from there and we can pay this 35,000 rupees. Okay. Then next step, 147 and 747 also we have enough amount in IGST tax, so we can shift that money from other cells and we can make the payment. So therefore, what is the amount that is payable in cash? Nothing. No need to deposit any amount because we have excess amounts in the other cells. We can shift the balances. Okay. Then question number 39, measures A to Z, a proprietary firm registered under GST is engaged in providing various services under one roof. The firm provides the following information pertaining to supplies made or input services availed by it during the month of March 2022. Amount collected for loading, unloading, packing and warehousing of potato chips. Potato chips is not agricultural produce. Any service in relation to agriculture or agricultural produce is exempted, but potato chips is not agricultural produce. So due to that reason, this particular activity will be taxable. Then fee paid for yoga camp conducted by a charitable trust registered under 12A of the Income Tax Act for employees of the firm. So fee paid for yoga camp, again it is exempted. So why it is exempted? This is actually outward supply. This is outward supply. So it is taxable and it will be taxable under FCM, whereas this is an inward supply because it is fees paid. Fees paid yoga camp, actually yoga camp conducted by a charitable trust. So advancement of religion, spirituality and yoga is actually exempted. So then interest received on fixed deposits with Apna Bank by the firm. Again it is what supply? Outward supply, and outward supply exempted. Why it is exempted? Interest or discount on loans, advances or deposits is exempted. Then professional services provided to a foreign diplomatic mission located in India. Again it is outward supply. See, foreign services provided by foreign diplomatic mission located in India is exempted, but not services provided to them. So if there is any foreign diplomatic mission, we have in exemptions, services provided by foreign diplomatic mission is exempted. So but not service provided to them. So this will be taxable and it will come under FCM. Recovery agent services provided to ABC Finance Limited and NBFC. Again this is an outward, and recovery agent service we don't have any exemption. So it will be taxable and it will be taxable under FCM. Okay. Then next one, security services provided to, sorry, recovery agent service to NBFC. Recovery agent service is RCM, na? Recovery agent service is covered under RCM, which means in the hands of A to Z proprietary firm, it will not be taxable. So, outward supply taxable under RCM. Security services provided to XYZ Limited, a registered person under GST. So, security services provided to XYZ Limited. So, again it is an outward supply. Again it is an outward supply. Security service provided to XYZ Limited, a registered person under GST, 80,000 rupees. So, security agency service is covered under RCM if the supplier is other than body corporate. But the supplier is what? Other than body corporate? Yes. And the recipient is registered? Yes. So, therefore, it will be taxable RCM and it will not be taxable in the hands of A to Z proprietary firm. Receipts from running an educational institution, including receipt for providing residential dwelling of 18,20,000 by institution to the students. So, any service provided by education institution to its students, faculty and staff is exempted. So, therefore, this is an outward supply, but this outward supply is exempted. Then, supply value including cost of fuel for providing renting of motor vehicle service to NPS Limited. So, this is an outward supply, and renting of motor vehicle, if cost of fuel is included, then the rate of GST is 5%. That is why they gave that point. If cost of fuel is included, the rate of GST is 5%. Now, so renting of motor vehicles, we don't have any exemption generally. Only some 4 exemptions are there. Number 1, renting of motor vehicle that can carry more than 12 passengers to a state road transport corporation. That is not here. And renting of motor vehicles, so that can carry more than electric motor vehicle that can carry more than 12 passengers to a local authority, but that is not here. Then motor vehicle carrying goods given on rent to a GTA is exempted. That is also not here. And renting of motor vehicle to a person who provides transportation service to education institution up to 12th standard, again not here. So, therefore, it is not covered under exemption, it will be taxable. But renting of motor vehicle is covered under RCM when? If 3 conditions are satisfied. Supplier is other than body corporate, yes. Recipient is body corporate, yes. And the rate of GST is 5%, yes. As all conditions are satisfied, it will be taxable under RCM, so it will not be taxable in the hands of A to Z proprietary firm. Then what and all will be taxable in the hands of A to Z proprietary? This 15,000 and this 50,000. So, total 65,000 will be taken as the value of taxable supply. On that, everything is intrastate supply only, because you can see all the supplies are intrastate. So, CGST, SGST 9% each, except for renting of vehicle, that is directly given. So, therefore, 9%, 9%, and remaining liability we don't have. And on inward supply also, we have not paid tax anywhere. So, we have only one inward supply, on the tax is not paid. So, ITZ situation will not arise. So, the gross GST payable is 5,850, but we need to provide the notes for each and every point. Then, question number 40, in case of transactions at 1 and 2 below, determine whether the amounts received are liable to GST. Briefly explain the applicable statutory provisions in support of your conclusions. ABC Limited, a registered bank, recovered check discounting charges of 5,250 from a customer C and Co. So, we have one exemption. Any consideration represented by way of interest or discount on loans, advances, deposits is exempted. But remember, only discount is exempted, but not discount charges. Only discount is exempted, but not discounting charges. Discounting charges is not exempted. Only discount is exempted, but discounting charges is not exempted. Charges. So, charges will be taxable. Accordingly, this 5,250 is taxable, and the same is not discount but charges for discounting. Then, T Limited, a dealer in air conditioner, supplies each unit at a list price of 30,000 rupees per unit. He also has an EMI scheme where the customer can take delivery of air conditioner on a monthly EMI of 10,500 payable in 3 installments. T Limited charges 600 extra for any delay in payment of monthly installments, and this amount was recovered from customer Venkat for delay in payment of second installment. So, dealer is giving the EMI scheme. So which means it's a hire purchase transaction or hire purchase financing, hire purchase transaction. Because in hire purchase financing, there will be three parties. Who are those three parties? Supplier, that is hire vendor, hire purchaser and a financier. But here we don't have any financier. So dealer is only giving the EMI scheme. So therefore in this case, that is a hire purchase transaction, and the interest involved in hire purchase transaction will be included in the value and chargeable to GST. So therefore this interest will be chargeable to GST in terms of 15(2)(d). Okay, what if it is a hire purchase financing? A financier is receiving the interest. That interest received by the financier will be exempted. So see the next question, question number 41. Mangesh Enterprises, Goa. A registered supplier has made the following supplies in the month of February 2022. Supply of guest house accommodation with facilities of cooling, heating, internet and packing to customers on a daily rentals of 1500. Mangesh Enterprises has 20 guest suites. Okay. During the month, there was a 50% occupancy during a month, and catering and food service were supplied separately to those who opted for it at a cost of 500 rupees per day of occupancy. Total amount collected for catering and food service was 70,000 rupees. Okay. So now here rate of GST for renting of guest house is 18% and food is 5%. Now is it composite supply or mixed supply? We need to check first. All are taxable. There are two supplies involved, accommodation and supply of food. Both are taxable. Is it naturally bundled? Catering and food service were supplied separately for those who opted. So which means it is not compulsory to everyone. It is not compulsory to everyone. Those who are opting, for them only it is being provided. So which means that it is not naturally bundled in the ordinary course of business. Food service were supplied separately to those who opted for it at a cost of 500 rupees per day. So not naturally bundled. So which means it is not a composite supply. When it is not a composite supply, we need to check mixed supply. For mixed supply, there should be single price. But there is no single price because separate price is there, 500 rupees per day. Which means it is neither composite supply nor mixed supply. Then it will be individual supplies taxable at the respective rates. So therefore, this 70,000 will be taxable at respective rate of 18%. And that is for catering and food service was 70,000. So see here. So what is that? GST payable for catering and food service is 70,000 into 5%, 3,500. And then for the accommodation is what? 20 guest suites into 50% occupancy into 1,500 rupees per day. And in which month? February month. February month, how many days is there? 28 days. So 20 guest suites into 28 days into 50% occupancy into 1,500 rupees per day into 18%. So 75,600 will be taken as the GST payable with respect to accommodation, and with respect to food it will be 5%. So individual supplies taxable accordingly. That is the answer. Then second part in this question, supplied monthly air conditioner maintenance service to a software company under a contract effective 1st February 2022 for 6 months. So this is for a period of 6 months, means a service which takes more than 3 months to complete. According to the terms of the service in the contract, the software company is liable to pay service charges of 12,000 for the entire period plus cost of spares and replacements at actuals. Taxes are separate and payable in accordance with the statute. Mangesh Enterprises is yet to raise an invoice, though the service is provided in February 2022. During the month, the company has not provided any spares or replacements as part of maintenance service. Further, the concern has not received any amount towards the above services. So now, what will be taken as the value here for this maintenance services? So it is a continuous supply of service. A service which takes more than 3 months to complete and involves periodic payment obligations is a continuous supply of service. So what is it we need to determine? Determine the rate and the amount of GST payable on the supplies made. So here, so air conditioner maintenance 18%. But what is the time of supply? So the time of supply in case of continuous supply of service is whether due date of installment is ascertainable from the contract, no. And whether payment is linked to completion of event, no. Means as and when they are receiving. So during the month of February, they have not raised any invoice. So which means, okay, yet to raise invoice for February, which means there is no GST payable for February month. That is the answer for this. Okay, as due date is not ascertainable from the contract and there is no information regarding payment received in February, time of supply do not fall in February, consequently GST is not payable. Then question number 42, Agni Limited filed GST return under section 39. So what is this section 39 return? Section 39 return is GSTR 3B. Section 39 return is GSTR 3B. Agni Limited filed GST return under section 39, that is GSTR 3B return for the month of January 2021 on 11th April 2021. Original due date for the said return was 20th February 2021 and details of tax assessed as payable for the month are given below. Now output tax payable and tax payable under reverse charge, input tax credit available for utilization means what? So it is not availed ITC, utilized ITC means in this whatever tax we already payable under RCM will also be included. See, actually RCM has two adjustments. First, whatever tax that we pay under RCM can be availed as ITC, okay, and adjusted against FCM liability. So therefore utilized ITC means including that 40,000, okay. So now from this FCM liability 1,80,000, we should reduce 70,000, so we get 1,10,000. 1,10,000 plus RCM liability always we need to pay by cash. So therefore the net GST payable will be 1,50,000 and 1,50,000. So this pertains to which period? So January. So January they should have paid by 20th February, but they are filing on 11th April. So interest will be computed only on the net liability when there is delay in filing GSTR 3B. So what is the delay period? 20th February, in February 8 days and March 31 days and April 11 days, that will be 50 days. So therefore 1,50,000 into 18% into 50 divided by 365. So 3,699 will be taken as the interest payable under CGST Act and SGST Act. Okay. Now, there is another part in this question. Assuming the company has a ITC balance of 2,50,000 each under CGST, SGST for the said month, compute the interest payable. So 2,50,000, but the liability is 1,80,000 plus 40 less than 2,50,000, so no liability. No. See how to compute the net liability? Gross liability under FCM 1,80,000 minus ITC 2,50,000, then add RCM liability 40. So that 40,000 will be the net liability. So we need to compute interest on 40,000. So there is some excess ITC that is carried forward because the ITC balance cannot be utilized for payment of GST under RCM. So on that 40,000, what is the rate of GST? 18%. And for how many days? 50 days. So 986 under CGST and SGST will be taken as the interest payable. So this is a very good question related to interest computation on account of delay in filing 3B. Then question number 43, Mr. X, a registered person in Mumbai, has made outward supplies of taxable goods as under. Mr. X has become liable for registration on 1st October 2021. He was granted registration on 1st January 2022. Supplies made from 1st April 2021 to 30th September 2021 for 12 lakhs. Supplies made from 1st October to 31st December 8 lakhs. Supplies made from 1st January to 31st January 2 lakhs. The first return furnished by Mr. X for the month of January 2022. So the first return will be filed after they get the registration certificate. So when they got the registration certificate? January. Means for January month they are filing the first return. Now not only the details of January, they will also include the details from the date they are liable to get registered. What is the date on which they are liable to get registered? 1st October. So all the outward supply details from 1st October 2021 to 31st January 2022. Okay. 1st October 2021 to 31st January 2022 means is 8 lakhs plus 2 lakhs. 10 lakhs details should be shown in the first return that is filed for the month of January. Okay, this is given in section 40, first return. Then question number 44, determine the effective date of registration in the following cases. The aggregate turnover of Dampur Industries of Delhi has exceeded 20 lakhs on 1st September. It submits the application for registration on 20th September. Registration certificate is granted to it on 22nd September. Mehta Teleservice, so in this case, what is the date on which they are liable to get registered? 1st September. What is the date on which they made application for registration? 20th September. Is the application made within 30 days? If the application for registration is made within 30 days from the date when they are liable to get registered, so then we will be taking the date of liability to get registered as the effective date of registration. So 1st September they are liable to get registered. On 20th September they make application for registration and registration certificate is granted on 22nd. But what is the effective date of registration? 1st September will be taken as the effective date of registration as the application is made within 30 days from the date they are liable. Then B case, if you see, Mehta Teleservices is an internet service provider in Lucknow. Its aggregate turnover exceeds 20 lakhs on 25th October. It submits the application for registration on 27 November. Registration certificate is granted to it on 2nd December. So what is the date on which they are liable? They are liable to get registered 25th October, and they make application for registration on 27 November. Is it within 30 days or beyond 30 days? It is beyond 30 days from the date they are liable to get registered. So therefore, the date on which they get the registration certificate, what is the date on which they get registration certificate? 2nd December. That 2nd December will be taken as the effective date of registration. So 2nd December is taken as the effective date of registration in this case. Then next, question number 45. Mr. Rajbir is in the business of trading of goods relating to interior decoration under the firm name Messrs. Rajbir and Sons. He has opted for composition scheme for the financial year 18-19. His turnover for the financial year 19-20 is 80 lakhs and is expected to achieve 130 lakhs in financial year 2021. Discuss whether Messrs. Rajbir and Sons can still enjoy the benefits of composition scheme in financial year 2020-21. So, a person who is opting for composition scheme under section 10 subsection 1 can provide services up to 10% of turnover during previous year or 5 lakhs, whichever is higher. So what was their turnover during the previous year? So current year is 2021 year. 2021 is the current year, means what is the previous year? Previous year is 1920. So previous year 1920, so what was their turnover? 80 lakhs. So 80 lakhs into 10%, 8 lakhs or 5 lakhs, whichever is higher. So they can render services up to 8 lakhs during the current year and still they can be continuing into the composition scheme. Okay. Moreover, can they opt for composition scheme? Yes, because a person opting for composition scheme under 10.1, his aggregate turnover during the previous year should not exceed 150 lakhs if they are located. Where are they located? So we don't have the information as to the state in which they are located. So therefore 150 lakhs will be taken and 1.5 crores, as they have not exceeded 1.5 crores, current year they can opt for composition scheme. Now his son Karan wants to start business of providing services related to interior decoration after completing post-graduation course in interior decoration under the same firm name, Messrs. Rajbir and Sons, with effect from 1/4/2020, and wants to enjoy the benefits of composition scheme. Now, so then once his son joins the firm, then it will become a partnership firm and a new registration is to be obtained. When a new registration is to be obtained, then they can render service up to 10% of turnover during previous year. For the new registration, previous year turnover is 0, 0 into 10%, 0 or 5 lakhs, whichever is higher. They can render services only up to 5 lakhs during the current year. Okay, because for the firm there is no turnover during the previous year. Suppose if they continue with the sole proprietorship name, then they can render service up to 8 lakhs during the current year. Okay, that's how we need to write the answer for this. Then question number 46, Heartbreads Private Limited is the supplier of bakery products registered in the current financial year So with effect from 1st October, in the month of October, total taxable supply is 88 lakhs. Is the company eligible for composition scheme? So a person registered in the current financial year means previous year the turnover is 0. It does not exceed 150 lakhs. So current year they can opt for composition scheme 10(1) as they are into the business of supply of food. If so, company wants to pay tax at 1% being a trader. However, the deputy commissioner contended that ASSI is liable to pay tax at 5% under the food and restaurant service category. So it is a bakery product, supplier of bakery products. Supplier of bakery products, actually we have one dispute here. Is bakery engaged in supply of goods or supply of service? So for that, whether there is a seating arrangement in the bakery to sit and eat, if yes, it will be treated as supply of service and they will be treated as supplying food service provider. Whereas if there is no place to sit, seating not there, it's a normal bakery, so then it will be covered under supply of goods, they will be treated as trader. Okay, so if there is a facility to sit in the bakery where food items are being served, then it falls under supply of service in the category of restaurant, and in that case, so we will take 5%, otherwise 1% only will be applicable. It's a very interesting question, so not yet tested, so this question can be asked in exam, okay, forthcoming exam. Now question number 47, examine by giving reasons in brief in the context of provisions contained under CGST Act 2017 as to taxability or otherwise of the following independent supply of services. Tejas and Company of Delhi, a tour operator, provided services to Robert, a foreign tourist resident of UK, for his tour conducted in Rajasthan and Agra for a sum of 2,50,000 and of Jammu and Kashmir for a sum of 1 lakh and received the total amount of 3,50,000. So we have one exemption. A tour operator in India providing tour to a foreign national in relation to the tour wholly conducted outside India is exempted. If it is partly in India, partly outside India, to the extent outside India, it is exempted. But in this case, if you see, so where is the tour operator in Delhi? Tour operator in Delhi, okay, and foreign tourist, okay, foreign tourist, and tour is conducted where? Rajasthan and Agra in India. So then in that case, definitely they are not eligible for that exemption and it will become taxable. It will become taxable. Then Miss Purnima acts as a team manager for Indian Sports League, a recognized sports body. She was contracted by multi-brand retail company to act as manager for tennis tournament organized by them as well as and paid 5 lakh rupees. So services provided by a player, referee, umpire, coach, team manager to recognized sports bodies only exempted. But in this case, Purnima is providing services to Indian Sports League or to a multi-brand retail company, not to the Indian Sports League, a multi-brand retail company. So then it is not to a recognized sports body. Therefore, the said activity will be again taxable. It will be taxable. Okay. Then next one, question number 48. Brahmi Foundation, Noida is registered as a trust under section 12AA of the Income Tax Act 1961. With effect from 1/8/2021, it intends to offer its guest houses to the pilgrims visiting the Noida shrine at 900 rupees per day. So renting of precincts of a religious place registered as a trust for accommodation is exempted if per day charge is less than 1,000. Here how much is per day charge? Less than 1,000 rupees na per day charge. Therefore it is exempted. And marriage hall at 12,000 rupees per day. So even for marriage hall or any purpose, if the hall of the religious place, precincts of the religious place is given on rent, if the rent is less than 10,000 rupees per day, then it is exempted. But in this case, what is the rent per day? The rent per day is 12,000. So therefore it will be taxable. Whereas here the rent is 900 rupees per day. That component is exempted. Okay. Now, advise them suitably. Suppose if they are charging a rent for the marriage hall less than 10,000 rupees per day, then in that case, they are not required to pay any GST. But this exemption is applicable to whom? Only to a religious place registered as a trust under section 12AA. So for them only. Next, question number 49. With reference to the provisions of CGST Act, examine whether GST is leviable in the following situations. Government of Rajasthan has provided services to ABC Limited of Rajasthan in the month of November for a consideration of 50,000. So it is other services. So government services divided into two. Specific exemptions, general exemptions. We don't know what is the service. So general exemption we are checking. So what is the first general exemption? Services other than renting of immobile property provided by government to a business entity whose turnover during the previous year does not exceed threshold limit for registration is exempted. In this case, what is the turnover of ABC Limited in the previous financial year? 18 lakhs. It does not exceed threshold limit 20 lakhs. Due to that reason, the said service is exempted. The said service provided by government to business entity is exempted. Then, Government of Rajasthan has provided services to XYZ Limited in the month of November for a consideration of 5,000. The turnover of XYZ in the financial year was 28 lakhs. Even though their turnover during the previous year exceeds threshold limit, but we have second general exemption. If the value of supply does not exceed 5,000, if the value of supply does not exceed 5,000, even in that case it will be exempted. Then, number 3, Jaipur Municipal Corporation has awarded a contract for construction of road to PQR Limited, failed to perform the contract and paid liquidated damages amounting to 50 lakhs in accordance with the terms of the contract. Okay. So now we have specific exemption. Consideration for tolerating an act is exempted. Okay. So services provided by government to business entity, in that one specific exemption is there. Consideration for tolerating an act, under that point it is exempted. Then XYZ Limited has applied for registration under Companies Act to Registrar of Companies and paid a registration fees of 13,85,510. Registration fees, registration under any law for the time being in force is exempted. Then Delhi government has charged rupees 50 lakhs from Agrocare Limited for allocation of natural resources for agricultural purpose in the month of November 2021. So, assignment of right to use natural resources to an individual farmer is only exempted, but they are assigning to whom? Company. So, it is not exempted, it will be taxable. And who will pay GST? RCM. So, that is that Agrocare Limited will pay GST. So, we have one exemption. Assignment of right to use natural resources to an individual farmer, but here it is Agrocare Limited, not an individual farmer, due to that reason taxable. Then XYZ Limited has paid to Customs Department 50,000 on account of merchant overtime charges. Merchant overtime charges is exempted, MOT charges. Then XYZ Limited has paid an upfront amount of 80 lakhs to Bihar government on account of assignment of right to use minerals in the state of Bihar. So actually, assignment of right to use natural resources before 1/4/2016, one-time charges is exempted. But here, nowhere it is given that it is assigned before 1/4/2016. That's why it will be taxable and it will come under RCM, where liability to pay GST is on XYZ Limited. So only 5th one and 7th one will be taxable. So 5th one and 7th one will be taxable. All others are exempted. Then last question. Geeta Services Limited, registered under GST, is engaged in providing various services to government. The company provides the following information in respect of services provided during the month of April. So, Geeta Services Limited is providing the service. Supply of manpower for cleanliness of roads, not involving any supply of goods. So, this cleanliness of roads is the activity of government as per Article 243G or W of the Constitution. As per Constitution, they have to do that activity. But that activity is outsourced. So, supply of pure service to government in relation to activities entrusted to them under article of the Constitution is exempted. So, this activity is exempted. What if it is goods? If it involves goods, then also it will be exempted if the value of the goods does not exceed 25% of the total value. So, second one, service provided by fair price shops. Fair price shops means ration shops. So these ration shops will work on a agency model. Government will pay some agency commission. That agency commission received for running a ration shop will be exempted. Then service of maintenance of street lights in a municipal area involving replacement of defunct lights and other spares along with maintenance. Generally replacement of defunct lights and other spares so constitutes 35% of the total. So we discussed one point just now. So composite supply of goods and services to government. If the value of goods does not exceed 25% of the total, then it is exempted. But in this case, the value of goods exceeds 25% of the total. Due to that reason, it will be taxable, and this is services provided to government. So it will be FCM only. Then service of brochure distribution provided under a training program for which 70% of the total expenditure is borne by government. So when it will be exempted, any training expenditure where at least 75% of the expenditure is borne by government, then the training program is exempted. But in this case, at least 75% is borne by government. No. So due to that reason, again it will be taxable under FCM. So first two are exempted and next two will be taxable. So with this, we completed mighty 50 questions. And these are the top 50 questions covering all the areas from GST. So these 50 questions, if you are thorough with, so many concepts are covered in this. So there is a possibility that these questions may come in the forthcoming exams. Okay, and so all the very best for your exams. And so definitely you all should clear, because already I have uploaded one fast track batch, complete fast track batch for 40 hours in my YouTube channel. And so this mighty 50 questions, this mighty 50 is not in that fast track. So this is additional, and therefore one more video is also being uploaded. So that will be rocket revision. So based on the pocket book that is provided to the students, so I will be doing a rocket revision, quick revision of all the concepts of GST for your CA intermediate exam. Prepare well. So I have given completely my heart out of it. So everything I gave it to you, all the resources, it is you who should best make use of it and come out with the flying colors. So we will meet you soon in CA final. I am waiting for you, and please, clear. Definitely you will clear. My prayers are always there for you, and you will clear, and you will be coming into CA final. We will meet CA final. Don't have any kind of tension in the exam hall. Peacefully sit in the exam hall, read the question. So remember only one thing, that if you have put the hard work, definitely you will get the success. Okay, so therefore don't bother about anything else. Have patience, read the question properly, just close your eyes, and yes, you can get the answer. Don't make mistakes, and remember what are all points that I have told you. So definitely you will come out with flying colors. All the very best for your tax exam. Take care.